All right, what's up, everybody? Welcome back to the channel. We have a large data dump coming in at 8:30 this morning. We've got two non-farm payrolls. Let's go ahead and pull up the calendar so you can see just what we have in store for us today. It's massive. So we've got a lot of stuff coming up here, dropping in 7 minutes. Got building permits, 3 of them. Housing starts, 3 of them. 2 non-farm payrolls, a retail sales data, and unemployment rate. Oh my goodness. Could absolutely be insane. There's some bad news coming out of China. Well, it was bad news about 20 hours ago, not so much anymore. I guess they are smacking the hash rate down once again. There's all kinds of stuff out there right now. You can see that we're taking a little bit of a dip here on the hash rate historical chart. You've got 100% of FUD going on right now. You've got Wall Street literally taking over the Bitcoin price and causing these manipulations. They've even gone as far as drop names on these people. Like, I'm not going to do that. Because unless they've got physical evidence, that could be a court case. So let me explain to you what's going on. Order flow, right? Trading, it does affect Bitcoin's price on the very near end, on the very near term. Yes, it does. Order flows do 100% make price bounce back and forth. It is very volatile. Bitcoin is one of the most volatile assets to invest in. However, with that being said, the potential for Bitcoin long term, and I'm not talking about 6 months long term, I'm talking about 10 years long term. We're going to look at some data in this video a little bit after the data dump. We're going to go into why I think it is so vitally important that you own at least a little bit of Bitcoin forever. I think the risks are too great, literally, not to own Bitcoin. Now, with that being said, am I saying that Bitcoin's going to $1 million? No. Am I saying that Bitcoin is a riskless investment? Absolutely not. There are many, many, many concerns. Many concerns. Any investment, every investment, no investment is a sure thing. That's what makes it risky. We don't know what the future holds. We can't predict 1 second out in time, let alone 10 years. But we're going to look at some data in this video, once we get the actual trading out of the way. We got 5 minutes, so I wouldn't be surprised if Bitcoin doesn't start to become really volatile here in the next few seconds. We're currently testing the the VWAP for this weekly range. Yesterday we lost the December volume weighted average price. If we go out to a daily time frame here and pull up the large trend line, you can see that on log, it doesn't work off log. All right, that's first and foremost. But on log, you've got a trend line down here that kind of acted as resistance. You also have on the near term the yearly opening range here delineated by the yellow line that acted as resistance. I put out an upload on Saturday basically telling you where near-term resistance and near-term support currently are. We lost this very near-term ascending trend line yesterday, but Friday is when we lost the daily 21 exponential moving average. Friday is when we lost the December open. Friday is when we lost the December VWAP. So Friday was the day that you should have been looking for near-term shorts, unless Saturday bounced back above all that stuff, and that didn't happen. So here we are. Weekly range has been set. Yesterday was your weekly open, so right here is going to be, where price needs to get back above in order to be green on the week. This could act as resistance on the very near term. So if you are looking to be a seller, if you think this week is going to be another terrible down week, then obviously that's about where you'd be looking to take your short trade. I honestly believe that when we get the data here in 4 minutes, if it's bad, you aren't going up there. You know what I mean? But obviously we have to wait and see. The jobs number isn't, like, the unemployment number isn't going to be a travesty if it's just 0.1% away from what is being estimated, right? The estimate number here for the unemployment is going to be 4.4. That's where we were last month, 4.4. So that's the forecast. If you get, 0.1 of a number up or down, I really don't think it's going to affect price that much. So if you get a 4.3 or a 4.5, I think it's okay. If you get a blowout number like a 5.6 or some insanely insane number like that, then obviously it's going to have a big move. But there is so much data that the market is going to have to crunch through here. So trading is going to be very difficult. You're going to take trades, you're probably going to get stopped. So make sure those trades are situated. What I have done so far this week, I've only traded one asset, and it's been Fartcoin. This trade's been going on since last week. Last week we shorted this 4-hour supply zone up there at about 38.71. I have taken profits and re-added to the position a couple times, thus bringing my cost basis down. And then yesterday I took profits one last time, and I have not added to that position yet. I will add to it here this morning if price rejects this 4-hour swing high and fails to go higher. Literally what it's doing now. We could look, if I don't want to mess that up, I could go look at Bonk and Pingu real quick. Neither one of them are doing it. So it would have to be Fartcoin. If we look at the technicals for Fartcoin, it's bearish. You're negative here on the deltas. You're under VWAP, under monthly VWAP, under everything that matters. Weekly open, check, pretty much everything, right? There's your weekly open right here. So you're under everything. So if you fail here and roll over, this was the liquidation point for yesterday as well. That's where my take profit was yesterday. So this is where I'm looking for resistance to hold if it's going to be a bearish trade. Like I said, deltas are negative, which is typically I want to look for that to be the trade. But as you can see down here, POC, your point of control, way down here. So it does look like they're trying to buy the dip. But with that being said, if you fail right here, this is where you'd be looking for your short. This is where you'd put your risk on. All right. And that's what we got. Literally 1 minute, less than 1 minute out. I'm going to go ahead and fire a very small position just to get some more risk on. There's a big spike there. That's good. Oh, let's see what the news says before we do anything real quick. I really just want to see that unemployment number. Things are spiking. What do we got? Today's Tuesday, 4.6. So unemployment came in higher than expected. And you can see none of this stuff is in yet. Even non-farm payroll is not in yet. But that, that's a bigger number. So go ahead and send that trade off. Let me see if I can get it off now. Might be too late. Set limit. Sell. All right, that dropped my cost basis down dramatically. What is going on with this thing? Okay, let me get back up here. Yeah, I'm not sure exactly what's going on with my computer. Well, I don't see anything up there. I did do a speed check. Everything was good before I went live. I'm not exactly sure what's going on. I don't see price. There it comes. All right, let me get on the Fartcoin position here because I don't have a stop out right yet. Just confirm that if it'll let me. There we go. Okay, stop is situated. So no matter what happens, I'm good. All right, so I made almost $800 this week scalping it. I want to cancel that. There we go. Okay, so if Fartcoin fails here, then I'll get more downside continuation. I mean, we're an hour away from the market open. I just wanted to go live. Oh, that's what's going on. So it's my upload speeds. My upload speeds were fine. I don't understand why they're not now. Everything was good right before I went live, and then whatever. Yeah, we'll keep an eye on Fartcoin. You can see how high it needs to spike in order to take me out. Unfortunately, you're going to be right on it, right? If you didn't short Fartcoin and been doing what I've done and just follow it down and re-adding to the position, taking profits, re-adding, taking profits. If you haven't been doing that, then you're going to be putting your entry on. It's going to happen right here. And if it does roll over, then if it blasts through this volume, that's going to give it fuel for the downside break. All right. So that's essentially what you're looking for if you have a bearish bias. Right now on the near term, I do have a bearish bias on Bitcoin. Obviously, Bitcoin is bearish, technically speaking, right? I'm a technical analyst. Oh, I didn't even check to see if the damn stream was working. Looks like YouTube has completely changed everything. Do you guys even see me? You can see my screen? Okay. Yeah, they've completely changed the whole studio. So weird. All right. Anyways, I can't even tell what's going on over here now. Yeah, so I have a bearish bias on Bitcoin simply because it's under the year open, it's under the month open. It's technically bearish, right? You're under everything that would tell you that you're up. So of course we have a bearish bias. We are scalping downside moves. We do expect Bitcoin will find a bottom. We just don't know when that will be. And I am a buyer long term for Bitcoin, right? So my macro bias, my big picture view on Bitcoin is once Bitcoin is fully adopted, and I mean by once people have had enough with government fiat currencies, once people truly understand the Bitcoin potential, once that is done, Bitcoin is going to be insanely expensive. It's expensive now, but there are other metrics we can look at that says not really. You know what I mean? Like, I hate to say it, but as of right now, I think realized price on Bitcoin is roughly sitting at about 53K. And on the weekly time frame, your 200 simple moving average is above $50,000. So that puts on a weekly time frame, Bitcoin at $50,000 would be an oversold Bitcoin, or at value, if you will. So I'm not saying that $50,000 Bitcoin is cheap Bitcoin. I'm not saying that. What I'm saying is that's when I will start dramatically buying it up, like scooping it up hand over fist. I've already bought MicroStrategy because MicroStrategy is already 70% off. And as Brandon explained in his video yesterday, that MNAV number, right? Yeah, as of right now, Bitcoin, the Bitcoin that MicroStrategy owns, you can buy at 80 cents on the dollar on the MNAV that they have right now. So in my opinion, right now, MicroStrategy is undervalued. Now, he was talking about the preferred yesterday. I just want to clear things up. They have 2 years. worth of money in the bank to cover their preferreds. MicroStrategy does. So MicroStrategy literally has to do nothing for 2 years, even if Bitcoin's price continues to drop. MicroStrategy as a company, as far as assets owned, right? Everything that they are as a company, everything that makes them a profitable company, they're good for 2 years. It's after 2 years, once you get beyond that point, if Bitcoin's price is still, falling, which we know that Bitcoin bear markets usually last about 1.5 years. But anyways, say something terrible happens and Google announces a massive quantum computing breakthrough or something, and then you get a 55% attack at the same time, and then all the Bitcoin devs all decide to change the code around and do all kinds of stuff, and then you get a split. Like, every bad thing that can happen to Bitcoin happens, right? And it just starts dumping. MicroStrategy can survive for 2 years. Their price won't go up, so you'll lose money on that investment, but you get what I'm saying. They will not be, they're not even worried right now. Michael Saylor just put out, well, he didn't put out a video, but he was being interviewed by someone just yesterday or the day before yesterday, and he literally said Bitcoin's price can crash to $1. If Bitcoin's price crashes to $1, we will buy it all. Literally what he said. MicroStrategy will buy all of it if it crashes that low. But he's not worried about this near-term volatility. I'm not really that concerned with this near-term volatility. I say, if Bitcoin wants to go into a prolonged bear market, bring it on, baby. That's what I say. That's what all of my community members say. We're ready. We short. We're not afraid to throw a short position on Bitcoin futures and capitalize on this aggressive downside move. This is not a time to be fearful. This is a time to be greedy. You sell it and then you buy it. You get me? That's what you got to do. That's what you got to do right now. You got to be short for when it's dropping, and then you got to scoop it up when it's oversold. You go in there and you buy it all up. You'll take every Bitcoin anybody wants to give you, because eventually Bitcoin's price is going to bounce and it's going to start trading up. It's only going to start going up. We have so much data on this thing. Mathematically speaking, Bitcoin is not in a bubble, right? It isn't a bubble. It is literally right where it should be. If you bought Bitcoin in the past, you were never underwater for more than 4 years. You cannot say that about every single financial asset out there. Every single all-time high in Bitcoin's history, if you bought any of them, all of them, you were only underwater for a maximum of like 3.5 years, and that was on this first cycle way back here. Every other cycle has been shorter, from the time where you bought the all-time high to where Bitcoin broke back above that. Every single bear market low has been higher. Every single time Bitcoin has went down, each cycle, that decline has been less. If you look at Bitcoin volatilities, this is not all the data, but I got that chart. I've got all the data. But just looking at this chart, this is Bitcoin volatility. If Bitcoin was a bubble, this chart would be going up and getting bigger, more volatile. It's doing the opposite. It's getting less volatile over time. That isn't a bubble. That is a sustainable growth asset. Let me see here. I don't see it. Don't tell me I lost it. I did a restart, so let me pull up. Not that. I must not have saved it. Here, I can do this. Okay, here you go. I'll just get it through Bravos Research. They have a lot of research on this. So here is your Bitcoin volatility metric from all time, 2011. So you can clearly see that the volatility is getting smaller and smaller and smaller over time. This is a very good sign. Very good sign, right? Bitcoin long term has so many positive reasons to, like I said in the last upload, I don't think you can afford not to own at least a little bit of Bitcoin. I'm not telling you to spend your entire life savings on Bitcoin and go 100x long. It's not what I'm saying. I'm saying buy Bitcoin on exchange, then buy a cold storage wallet and send those Bitcoins to your off exchange wallet, your hardware wallet. I don't care if it's a digital wallet or if it's just a piece of metal or if it's a piece of paper with the Bitcoin code. Just something that you can save and hold and keep forever. And you'll be good. You'll be fine. This way, if what I think and what Michael Staylor thinks and hundreds of thousands of other people think about Bitcoin, when it ultimately goes up, you will be good. You will have that money and it will hopefully explode in value over time. And if you lose it all, make sure you don't, like I said, go over your skis. Don't over leverage yourself. It's simple. It's very simple. Buy Bitcoin when you can afford to buy some and just keep stacking over time. You'll be good. It will be fine. This bear market is not going to be the one that destroys Bitcoin. There are risks, but I think it will be fine. And it's because of what it is underlying what it is as a function. It's a protocol. It isn't a piece of tech, right? It's not a website. It's not a company. It is a protocol that literally solves the money problem. It has real world value. Real world value. Right now, real world value is about $53,000. Near-term trading is absolutely going to affect near-term prices. That's why we look at technicals, right? That's why we started to get bearish at 111, because price was telling us that it was going down. It was no longer going up. That's why we started shorting. And looking at this disgusting chart, we're still there, right? We're still there. You are testing a weekly support here. I don't know that you need to make a fresh low down here at $80,000. I don't know that it will even, but I do want to be holding some kind of short, whether I'm long puts on IBIT or short futures or whatever, just something that pays me if Bitcoin's price continues to drop. Now, there are some other macro things that are going on right now. One of those is the potential breakdown in the yen, or potential spike in the yen. We've seen the yen pull back a little bit this week. The Aussie yen, you can see it did take out last week's low this week. It's only Tuesday. This asset is clearly in an uptrend, and it has also taken out other weekly lows before and continued up. So this isn't a terrible looking chart. You can get all the way down to 99.58 on Aussie yen and still be structured bullishly on Aussie yen. But it is starting to give us a slight sell signal here. You do have a supply zone setting up there. We looked at it last week on the last stream. We looked at, that was Swiss yen where we caught an 8. I didn't catch it. If some other people were watching it, they could have caught it. I didn't catch it. But we were looking at the 4-hour supply on Friday morning, saying that if we open this week and test this level, that would be the level to look for shorts. And that's 4-hour supply right there. That's exactly what Swiss yen did This is the Sunday evening opening price. So that's your weekly open right there for Swiss yen. Within 30 minutes, you went right up there, tagged that 4-hour supply zone, rejected, spent about another hour or so chopping sideways, and then dumped all night long. It has since rolled over. Yesterday, we were taking a short on this right here. So the first position I put on with a 0.5% risk, that position got stopped out. I added another short position to it with another 0.5% risk. That position is still open. It could get stopped out if we make a new weekly high, or if we take yesterday's high out. Well, that's not even yesterday's high. If we take this New York session high out, then that trade will get stopped out. All right. If the yen wants to firm up here, that could bring havoc to other risk markets. We've been talking about that for months now, not weeks. We didn't just bring this up yesterday or last week. We've been talking about this since, 2 NFPs ago? So 2 months ago? That's when I was bringing up the fact that right here, we wanted to be short based on the yen carry trade unwind. So back in August, July, late July, we were talking about the potential for a yen carry trade unwind. But that would be very bad. And that's not what we are anticipating happening. Right? So we've been talking about it. It's just not playing out. And there's no reason for you to assume that it will. That would be like massive bad for world markets. Hugely, hugely bad if the yen trade carry, or if the carry trade unwind happens or occurs or even starts to happen. It will be bad. Now, we are probably going to see a little bit of an unwind just based on the simple fact that the US is cutting interest rates and the BOJ is hiking interest rates. So we could see some of that unwinding. This used to be a lot wider, right? It used to be a lot wider when the US interest rate near-term curve was up here, yen was down here. So it was super wide. At one point, it was almost 5%. That's the carry. They were literally buying USD, selling yen for that 5% carry. Well, now it is no longer 5% on the near term. They're expected to hike 25 basis points. That'll put them on the near term at 0.75. And we just got a rate cut down 25. So that spread went from 5 basis points down to about 3.25. So this right here in itself could be the reason why we're seeing a little bit of yen strength. But it's not anything like what I would expect if they were seriously thinking about the yen carry trade unwind. This is well within normal volatilities for Forex market, is what I'm trying to say. Very, very normal. USD CAD might be a trade here. You can watch the December open on USD CAD. Canadian dollar has been a little bit, euro was a lot stronger than the Canadian dollar for a long time. But you can see that it's been trading in this 4-month range here. You've already taken out November's low. So this would be a potential dead cat bounce after you did take out that low. So if there is going to be continuation from this move, then I would expect it to hold in this area. It's just now happening, literally. So the December open, you could put a short on there, stop at the high of day. And then if you do get that downside continuation move on Euro CAD, you would need Canadian dollar to be the major mover here, because if the dollar continues lower, Euro's going to be strong. So you need Canadian dollar to be stronger than the Euro. So DXY trending down has been for a little bit here. If it continues to do that, then the Euro is going to continue to firm up, not weaken. But versus the Canadian dollar, there is a setup there. You're retesting the monthly open. If you're going to be a negative monthly candle, then this is about the area you would look for that short to take place. Everything else is pretty choppy in the Forex world. Farcoin's still not rolling over here. So very choppy price action to say the least here after we got the news. Starting to see some of that data come in, not yet. A little bit of it. We've got the non-farm payrolls, negative 105. That's not good. I don't even have a forecast number here. Prior was 108. That's a negative in front of that 105, so that's not great. 64. Like, I don't even know if these numbers are right at this point. A lot of data going to be coming in, and this data is going to be looked at for a week. So you can see a very choppy week this week. Bitcoin still testing that weekly open. So Bitcoin looks okay. Ethereum did also make a fresh swing high back down here to support. Market's going to open in 30 minutes, and then you're going to see probably the real move, whichever way that is. The people have been talking about how market makers or whoever, Jane Street, whoever, right, are selling Bitcoin on the open at the New York session. Yeah, probably because it's in a downtrend. So have we. We've been doing the same thing. Are we also the reason? We are, probably, right? Don't blame it on other people. Just take advantage. That's what my channel is for, to teach you how. Take advantage. You don't have to worry about it. Long term it'll be okay. On the near term, you can take advantage of this volatility. It's absolutely fantastic. But yeah, sold off hard yesterday at 9:30. Sold off hard Friday at 10. Thursday, it didn't do anything. So why didn't they sell it Thursday? Right here's Thursday. They didn't do it. So obviously it's not a repeatable process. They didn't sell it on Wednesday until 4 o'clock. In fact, Wednesday, they bought it at the New York session open. Right here. Up it went. So just ignore the FOMO. Ignore it. It's all just... People need a reason, right? They're looking for a reason. You don't need a reason. If the technicals say to be bearish, be bearish. Simplicity. It rules. Starting to see a little bit more of a move here on Ethereum. Bitcoin as well. Low day is going to be way down here. So that's your low of day. So this would just be a near-term pullback here at best. Good cold water, love it. So let's look at some adoption curves as we're waiting on the market to wind up here for the New York session open. So if you look, like in terms of Bitcoin is a protocol, not a device, right? It's not a technology or anything like that. It's a protocol. The telephone, like not necessarily the telephone device, but the structure the telephone was built on, phone lines and this and that. Like, it took a few years before it became mainstream, or where over 50% of people were participating in it. Same thing with electricity and internet. So this chart shows you where Bitcoin is on that curve, right? So we're right in here. So basically, it's about 9 years before Bitcoin gets to the part of this curve where it starts to grow almost crazy, right? It'll explode to the upside because of the way that these curves work. So we're still early in the adoption cycle when it comes to Bitcoin. Even though it's at these insane prices, it's still very early in the adoption cycle as compared to other things. And let's not forget, Bitcoin it solves the money problem. And that, for some reason, is the only one that I saved. Whatever. Doesn't matter. If you want to know more about, like, what is Bitcoin, there are a couple different channels that you guys can look into. I'll post this one in the chat, and I will also post it in my... Here it is in the chat. That's a pretty good video right there. That guy gives you a lot of data to see where it is on, as far as adoption curve. What is Bitcoin? How does it work? There are things that we need to do as Bitcoiners, right? We need to make sure our money is on cold storage. Running a node also helps. We need to help that. We need people to start doing that. Start speaking about stuff like that. It's easy to run a node. You can run it on your own computer or a laptop you're not using, something like that. Get involved in what Bitcoin is fundamentally, the tech. You don't need to know how to code or anything like that, right? You just understand fully what Bitcoin is, and that'll give you more incentive to literally want to buy it all. Literally want to be scooping it all up as much as possible. But that's a good channel. Brandon gave me another channel yesterday that is also a good channel to kind of, as far as like technical stuff when it comes to, I don't know if I can find him as easy. But yeah, definitely give that Bitcoin Straight Up guy a watch. His videos are really good. He's really good at putting together YouTube videos and data. And then Bitcoin University. Here's another one. These two channels, good channels. If you got some time, you want to watch, give them a watch. Yeah, Bitcoin coming off pretty good here now. So is Fartcoin starting to? Yeah, this is what we want to see. I like to see the volume build up here, especially at the top of the range. If Fartcoin is going to continue to sell off today, I want to see this POC migrate higher. We already have the deltas telling us that it's completely structured here for further downside. It's just an indicator, though. It doesn't mean it will go down. So please make sure your risk is mitigated. Indicators just give you an idea of bias. It doesn't give you the exact bias. But yeah, it does look weak, right? It looks weaker than it does strong. And the trend so far is down. As long as we're heading that direction, we definitely want to be looking to short the swing highs. That's typically what we want to do in a downtrending market. We want to scalp the highs. We want to short them. And in uptrending markets, we want to buy dips, right? We want to buy those bottoms. We don't have that happening yet. We've got a lot of time. So where do I think Bitcoin will bottom? Well, since we bottomed like this, every single cycle, the bottom has been less aggressive. 86, then 84, then 77, 76.5. That puts you at about a 30K Bitcoin. That would be a higher low, even in terms of long-term Bitcoin sustainable growth. It would be very, very consistent with what we've seen in previous cycles. So $30,000, it would literally look like Bitcoin shit the bed. You go from 120 to 30, yeah, it's going to feel bad, right? I'm not saying it will get down that low at all. I'm just saying if it does, that's an area where I'd be very much interested in buying, right? We haven't hit oversold yet on the weekly RSI, another area of which I like to buy. But since Bitcoin come off 76% potentially, that is as long as, you know, something on a fundamental basis, like just a 4-year cycle model, in my opinion, is not enough to push it down to $76,000. If you remember last cycle, we were bearish at the highs based on high inflation and based on the 4-year cycle model. This year was a little bit different. We started shorting at 111 based on technicals, but we weren't really convinced that the 4-year cycle model was going to play out. If you remember the last cycle, the 4-year cycle model played out at the beginning, then it went into this long-term, like almost 4-month period where it just chopped sideways. I remember people were calling this a Wyckoff accumulation formation and all of that, whereas we were still selling it because price was still trading under the yearly open, and we were bearish as long as that was the case, right? And then we got another dump, another leg down. What happened was Celsius got liquidated. It was an exchange. FTX got liquidated. It was also an exchange. Those were reasons that caused further downside pressure on Bitcoin. Bitcoin isn't just going to dump down to 30K. You're going to need a macro reason for that to happen. And I don't think you have that in just the 4-year cycle model. I could be wrong, but I will make money if this plays out. I will be right in terms of money. I will be wrong in terms of I didn't call the top. I don't think this is the top for Bitcoin. I think the top for Bitcoin is way higher. Are you selling Bitcoin now? Absolutely not. Absolutely not. I am a buyer. I'm shorting Bitcoin in my trading account, right? I am a day trader, so this is what I have to do as a living to pay my bills. So yes, I am on an intraday basis shorting Bitcoin Monday through Saturday, if you will. But am I selling my Bitcoin that I own in cold storage? This cold storage wallet right there? No, I am not. In fact, I will put more in when it hits oversold. I will convert. So like when I'm shorting Fartcoin and Bitcoin and anything else, like when I'm making money here, when I'm good, like when my bank account is flush and say I hit a good week out of the park, like I did last week, right? Last week, knocked it out of the park. It was one of the best weeks I've had for a long time. Multiple thousands of dollars. So when I do stuff like that, instead of sending all this tether to my bank account, I just literally switch it to Bitcoin and then send the Bitcoin to cold storage, right? That's all you, like, I can't trade the inverse swap contract anymore because Weeks no longer offers it. They used to, I didn't trade in Tether. I only traded Bitcoin and I only traded on the inverse swap contract. So that way I could make money on these moves, whether Bitcoin's going up or down. I'm just trading it, and accumulating. So yeah, no, I'm not selling my cold storage hard owned Bitcoin. No, I will never sell that. Never. Like that will be handed down to my kids so that way they can hand it down to their kids and yada yada. That's what I'm looking for in Bitcoin. If you're just trying to, like, I don't know what your time span is, but my time span is long term. Like, yeah, long term. Bitcoin provides freedom. It's hard money. You can send it anywhere in the world. Like, there's so many reasons why it's just good. So yeah, when I'm not selling that, but in terms of, am I protecting the Bitcoin that I own? Yes. Yes, I own IBIT puts, long dated puts out to 2027. I own many of those. So there will be a point in time, or in price, not in time, but there will be a point in price if Bitcoin continues to dump what I own, and what I'm making on my hedge will be at parity. So there will become a time where I will stop losing money as Bitcoin goes down, and I will start making money as Bitcoin goes down. That's a proper hedge. All right. So I'm not selling what I own, but yes, I am selling it in terms of to make more Bitcoin week to week, to continue to make money. If you understand what I'm trying to say there. I have a downside bias on it right now because it's been down. We've been selling it for weeks as far as shorting it, but I'm not getting rid of what I own. The Bitcoin I own, I will always own. I think everybody should be buying Bitcoin with every spare dime they own. I think, like, I've been doing a lot of research on Bitcoin for a long time now. I'm not just a volatility scalper. I firmly believe that this asset has the potential. Like I said, there are risks. There are massive risks, man. Bitcoin may never reach that potential. But if it does reach the potential that it has, we can't even wrap our brains around what it could go in terms of how high. Like, one of the best examples of this is like the water drop test. If you go into a pool at a specific time and you drop one drop of water every 5 minutes, but then the next 5 minutes, instead of dropping one, you drop two, and then 5 minutes later you drop three, and it's exponential growth. It's the same exact scenario as the 1 grain of rice. I will take 1 grain of rice, and every move I make that's right, double it, right? And before long, he would take all the king's rice, right? Same principle. It's exponential growth. We can't even fathom. I think the max is supposed to be like, with how many Bitcoin there are and how many increments you can break it down. I think there's like, I think it's something like 24 million per is what the limit could be. Like $24 million per Bitcoin. But yeah, good stuff, man. I'm not saying it'll go to $24 million. I'm just saying there's so much potential to what Bitcoin can do. Even if it does go into a bear market for all of next year. 2027, 8, 9, and 30 are going to be up years. Good morning. Unless we go through a credit crisis and the whole monetary system collapses, and there's so many risks out there. Just, if you can afford to buy it. If you can't, don't. My oil short is almost at target. Yeah, oil dumped, and I'm upset because I missed it. I didn't want to short it into support. That was my issue with it. I called the short out. That short would have been stopped out, the one that I did call out the other morning. Because during the Fed speak, oil did come. Oh, that is not oil. During the Fed speak, there it is. It did go, what the hell? It did go up. So right here, it was here. So we were watching this swing high. I was talking about taking the short there, but it was right into support. The monthly support was literally like right here. So I didn't think it was going to have a massive breakdown like this. And then we got the FOMC data. Oil spiked up real hard, getting extremely volatile, and then it dumped. And it is currently dumping. Oil is probably getting to about as low as it's going to go soon. They like oil to stay above like 45, 50 and under 70. Like, that's pretty much oil's sweet spot where people can still drill and make money and all that. So, and it's, I mean, oil is highly manipulated with OPEC and all that other stuff, but it looks like you're getting ready to take out that monthly swing low. That's a long-term swing low as well. You can see when it did happen, it took out all the way back to 2021. We don't have any data going back behind April 2020 because that was when oil went to negative on the futures, which that will probably never happen again. 719. The next liquidation point, 47.19. So it'll be interesting to see what oil does here after liquidating that quarterly swing low. See if it finds support. But no, I did not expect that to happen. I actually thought there for a little while it was going to break out to the upside. So this just shows how people were off sides. This was when everybody was expecting a bear market on the S&P, all that. Yeah, oil did the exact opposite. See, oil is a good investment in a bear market sometimes because if there's going to be high inflation, people will accumulate oil. Oil does okay in high inflationary environments. Something else that we noticed last week is our ratios are not showing us that the markets are as strong as they are acting. Like if you look at growth versus value here, this is the growth versus value ratio. This usually trends up when markets are like good, and it usually has dramatic pullbacks when markets aren't good. So you can see growth versus value here correcting intensely. But yet if I go pull up IWM, you just made fresh all-time highs. So you're probably going to see a correction here. Bitcoin has been leading the way. So like in terms of global liquidity, Bitcoin acts more quickly to what's going on. We're in a downturn on global liquidity. The Fed is going to start doing QE again, not QE. QE that's not QE, that is QE, but ain't QE. Back to being maybe QE. They're calling it something different. It's not quantitative easing this time. It's portfolio management or some crap. It's still the same thing. But they're only going to be buying $40 billion a month. But yeah, so because of this growth versus value rolling over like this is concerning. So like the S&P 500 could see a significant pullback here. I have a 6100 strike put on right now. So if we make new lows, $6,500 strike put. I have a $6,100 strike put and a $6,500 strike put on the SPX cash market contracts. As long as we're trading under November's high, I want to hold a put. The VIX got back down to 15 briefly last week. On Thursday, we tagged 1481. Whenever the VIX is under 15, that's literally when you should be putting on those put contracts. You just have to decide what strike and how much money you want to risk on that trade. But I went out to 2027 and bought $6,100 strike, and $6,500 strike is a little bit closer. It's about August. And it's simply because of this. This is very not great. XLK versus XLP. This is also rolling over. This is just tech versus consumer staples. That's not great. We want these ratios slowly trending higher. We don't want them pulling back, and we don't want them pulling back aggressively. Right now, they're not pulling back aggressively, but they did pull back aggressively. Excuse me. And then this one is starting to pull back more aggressively. It could find support, but as long as it's doing this, I want to have protection on. And then here's XLE versus SPY. This is good when it trends lower. But since oil is looking to liquidate that quarter low, that's why this is weakening here. I would say if you do liquidate that quarter low and bounce on oil, this will spike. So oil could potentially be a buy soon. Be careful if you're still shorting oil. Take profits, which West did take profits. He said he took profits. But yeah, these things aren't looking great. They're not looking terrible. It isn't, short with everything you own. It isn't one of those scenarios, but it's definitely, investors are definitely going into value. They are leaving growth, going into value. Growth is tech. And a more simple way to look at this, right? They are fleeing tech and going into value plays. So think defensive positioning. That's kind of what they're doing here. If we look at the skew is also spiking. Whenever the skew spikes, it simply means there is a lot of hedging activity going on. And we're seeing that spike. Market's going to open here in a little bit, but that's where we ticked up yesterday. Today, you're gapping up slightly higher. They could have just been getting their hedges on in anticipation of this massive data dump. Like we saw the VIX bounce a little bit. I would say that's in anticipation of the data dump. This was when we closed this gap. We had a gap down here. And that gap was filled right here. So I deleted it. Next lower side gap on the VIX will be down to 1324. You're retesting the yearly open as resistance again. Gold is spiking hard here. That's probably because the dollar rolled over. Oh, you can't see the damn dollar chart here. The dollar spiked pretty strongly to the downside on that unemployment print and other stuff. Whether or not that ends up being, this trend line is a long-term trend line. I don't know that it's going to hold support, but it goes from way back. So that's where this swing high came into play. This swing low came into play. And then we chopped it all to pieces in here. But you can see you're tagging it from the top side break coming back into it here. There's a lot of levels here. You got your October open. That's this white line right there. A lot of stuff going on with dollar. And I haven't really been on top of those EMAs, but let's pull up the 21 on day all the way up here. So it's starting to get a little bit extended to the downside from the 21 exponential. I wouldn't be looking to buy the bounce. I would be more or less looking to sell the top of the bounce. I wouldn't be trying to pick the bottom here. I would wait for it to tag. Maybe this is September's high, so maybe it goes up into here, finds resistance, and rolls back over. Rate cuts, typically speaking, should be bearish for the dollar. You also have yen participants or yen investors or people from Japan leaving US debt, going into 30-year JGBs. So we're seeing a little bit of weakness here on the dollar, but long-term dollar still trading in a multi-month range. Still very, very sideways and choppy here. We won't really resolve this range unless we break out above what was August's high right here. But we liquidated August's high and then rolled over. So you're coming into a support zone here, right? Oh, I would probably be looking for resistance here or here next month on the dollar. But then also, if you look at the weekly, you've lost your weekly 21. So the dollar looked good here. It looked like it wanted to break out to the upside and start a significant trend higher, which would have been counterintuitive to what the macro picture looked like. If you're talking about macro picture like milkshake theory macro, then obviously you still have a huge dollar bull bias. But I meant just macro in terms of rate cuts and what's going on right now in the macro. It looked like it wanted to break out, and then that breakout failed. We lost the 21 here. This was just a little bit of volatility, and there was that downside push. Now you're seeing continuation. But you are coming into that monthly level. So it could act as support. It could also not. The dollar could absolutely blast right through there. I would love to see this range resolved. To be 100% honest with you, I am sick of it. I am literally sick. Like the last huge trending move that I made in my Forex account was Q1 2025, where I was long the euro. So I caught the year open move on the dollar, where it just literally opened, set a yearly high, and rolled over. I caught that move in the first quarter. That was a nice trending move. And then that was it. We had 1 quarter of trending in 2025 on the dollar. And the rest of it's been very freaking choppy and annoying. Actually, 2 quarters, sorry. I didn't catch all of this. I caught all of that quarter. So I was long euro, caught all of that, and then we got a much larger move that I wasn't in on, and then it went into nothingville. This happened rapidly. So yeah, we've been waiting for the dollar to resolve either higher or resolve lower. And it's been 6-7 months just shopping. Yeah, it's pulling back a little bit this morning here. I honestly thought that a huge dollar breakdown would be bullish for Bitcoin. And we're just not seeing that yet. I do believe we will see Bitcoin bounce. I just don't know where from. And I think when it does bounce, it's going to rip your face off. It's going to be an aggressive spike. We can look at... let's go look at this 1 month. This is just the 30-day. What it looks like right now. So, I mean, you're starting to extinguish that very near-term downside liquidity. I'm gonna refresh this chart real quick. Yeah, I mean, if you get down to 86,598 this week, that's probably where it's going to slow its roll a little bit. Might start to head back to the upside if that liquidity starts to build in from the shorts. But if you just look at this green line here in comparison to this red line, clearly there's more liquidity on the 30-day to the upside. Now there's a big liquidity spike down here on the sell side. But I like to just focus on what's going on, just like 3 bars out on both sides. So if you go 3 bars out from the red line to the downside, it's 137.91 million And if you go 3 bars to the upside, it's 152. All right. They're still kind of good, right? When it gets like insanely different is once you get out to 4 bars. 4 bars, you're looking at 268 mil worth of liquidations to the upside. And then you're looking at 148 liquidations to the downside. So you're starting to see that skew happen a little bit. So Bitcoin's going to run out of downside steam eventually. When it does, it could be a very aggressive bounce back. Trying to time that bounce is going to be very difficult, and you will most likely miss it. It probably won't be as simple as this has been. This has been a very, very, like, one-sided trend since October. We've been in a 3-week range here, so the last 3 weeks kind of difficult, but every other week after that, before that, was just straight trending. I don't think you're going to break out into a big downside trending move like this. You could, but I don't know. I don't see it. I figure it's going to get down here, exhaust the sell side, and then just bam. And that bam could be multiple days, a couple weeks of upside even. It'll be difficult to get in depending on how volatile the move is. We saw a ginormous upside spike on Pingu not too long ago. If you remember that Tuesday, something like that. That's what I'm talking about. Like, it's almost impossible to buy this when it's just printing up candles. It's like, where do you get involved? All right. But ultimately the sellers came back. Pingu is more of an alt shitcoin. It doesn't really have much value in terms of meaning or use case. I like shorting alts. They move a lot. The Fartcoin trade ain't really working out yet, so they might not sell it. 9:30 happened. We got it. It's here. Let's see what they do here at the open. It needs to get to 34.99 to stop me out. That's right up to here. You just made almost a fresh day high. High is 33.89, 33.88. So you got almost there. You're probably going to get stopped out if you shorted that at the NFP. And then XMR looks like it's trying to bounce or break out here, which is insane. I think it's because of Bitcoin weakness, to be honest with you. That high is 420 on the nose, on the dot. Same with this high, 420. Light it up. Spark them if you got them. Now, in all seriousness, Bitcoin's been kind of weak. This has been bouncing back and forth at the top end of the range. It's insane. You just smoked last week's high. So if it's going to roll over, it should do it here. This should be like the last zone. If it continues to push above that point, then I would leave it alone. I would not try to short it. But if you are looking for shorts on XMR, understand this does not trade on regular exchanges like the others do. So people that buy this, they love it. They own it. They never sell it. ZEC does trade. Now, futures, XMR futures trade on those exchanges. I can trade XMR futures, but you can't buy this on Coinbase. All right. The government, they don't like it. Monero is a secrecy token. People go there to hide money, I guess. But ZEC, it tried to break out. It has pulled back significantly here, trying to bounce. I won't love the short on ZEC till it loses this area. If it loses 382, then I'll be more comfortable with shorting it. But taking a short on it right here with Monero about to break out would be kind of risky, I think, because ZEC like almost tracks Monero, if you will. They're in the same sector. They're not identical in how they work and all that, but it's kind of like people that don't want to get involved in Monero would do it through ZEC. But you also have other people that like Zcash for other reasons. But yeah, it's lost the weekly VWAP. If it can maintain the monthly, then that's good. So even if it were to break down here, if it would start chopping right under it like that and set in a multi-range under, I think that would be more bullish than bearish. It needs to lose it and show me that downside continuation move before I would start getting super bearish on this. But long term, I think this thing could use a little bit deeper of a correction. But let's be fair. I mean, it lost, that's damn near half its value. So it's probably good. Yeah, it was over half. Got over its skis. Monero, however, is still very much up. Like, you're only down 13% on Monero. And year to date, you're up massively. Year to date, you're up 115%. Now you can see what I mean when I say this thing is up. I mean, last month was the breakout for Monero. This month looks like a pullback to support. Looks like it wants to continue higher. But as long as you're under December's open, you're threatening a deeper correction. That's just the way I would look at it. It's definitely bullish. You're above the daily and weekly 21 exponentials. That is definitely bullish. It held support at the daily yesterday. This would have been a buying opportunity for us. When I say us, I just mean the Trade Talk community and my private members. We was looking at that as a long opportunity. Let me see the questions real quick. Now that the market's open, would you borrow against your Bitcoin if it did drop to 30K? Would I borrow against it if it did drop to 30K? Probably not. I'm in a good position to where I don't need to borrow against my Bitcoin. I can understand people that are not in my position. They might need to borrow against their Bitcoin. But borrowing against your Bitcoin, trying to pick a bottom, that's no different than buying it with leverage. If you need to borrow Bitcoin or need to borrow cash against your Bitcoin, then obviously you got to do what you got to do. You're going to be able to borrow much more money, though, when Bitcoin's up higher, instead of waiting to let it pull back. Because your longs, if you own $50,000 of Bitcoin at 100K, at 30K, you're going to own a lot less. So you're only going to be able to buy about 50% of what you own, or borrow against 50% about what you own. So at a 30K Bitcoin, you're only going to be able to borrow 15 grand. If you get what I'm saying. Like if If I was looking to borrow to use that cash to pay my bills, I would rather do that when Bitcoin is up. So that way I can get a large amount of cash, make all the payments that I need to pay, and live out the entire year on that loan. You got to have another revenue stream, obviously, to pay that loan back. But interest rates are going down, so the lower interest rates go, in theory, that is typically when you want to borrow, not when interest rates are high. I just don't do it. If I had to do it, I would. I just don't. I like trading better instead of going to the bank and being like, yo, here's my wallet. Give me some. I want to hold my wallet. You know what I mean? I want to be in control of my wallet. I was asked the question the other day, I wasn't asked. I was watching a movie where the question was posed to somebody. After you grabbed all your loved ones, counting obviously wife, children, pets, right? After you've grabbed all of those, what is the first thing you grab if your house is on fire? My answer was my Bitcoin cold storage wallet, which all I need to grab is my seed phrase. I don't need to grab the wallet, but you get what I'm saying? Like my Bitcoin, I'm grabbing that if my house is on fire. But I have multiple cards with seed phrases. I don't need to do that. It would just be an ease of use thing. It's in a small safe. I was grabbing that safe, in other words, but mainly because of the gold and Bitcoin. I would grab that safe. Yeah. I don't want to give my Bitcoin keys to someone and let them loan me money. I do pay a lot in taxes because of that, but I'm okay. Like I'm not. It is what it is, right? If I ever had to borrow, I would. I just don't. So I don't really have much info for you there. Not too heavily leveraged, but enough to get some dollars and pay them off over time. Got you. I understand why. Like I said, if you're in a position where you need to do that, maybe talk to a financial advisor. I'm not a financial advisor. I'm trying to teach you guys how to analyze price. I'm not trying to teach you how to analyze or how to manage your money. It's best that you do manage your own money. It's best that you don't need a financial advisor. With this day and age now, every single person, if you have a computer and an internet connection, you should be managing you should know enough about money now as an adult to manage it yourself. If you have a lot of money, then you need a money manager simply to, keep track of certain things. Like if you have multiple businesses and yada, 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 you got to make payroll, this and that. If you're a single individual, you should be able to manage your own funds, no matter how much money you got. It should be simple. You can earn dividend money. You can split it up. There are so many ways to grow your money. So many ways. The admin wants oil at 55, they said. The administration, it makes sense. I don't really see that controlling the price, gas at the pumps, if you will, because oil has been trending lower for a very long time. And yet every time I fill my truck up, I'm paying over $3.50 a gallon. Now I do only fill my truck up with the most expensive gasoline at the pump, whether that's 93 or 94 octane. So I always pay a premium for that. And right now it's about $3.55, but there, not even a couple months ago, it was closer to $4. And oil has literally been trending down for years. Years. It's not really affecting the gas at the pump prices. So when he says stuff like that, I'm assuming it's to make people think I want cheaper gas. And that just ain't the case. Like, this thing's been trending down for a long time. But gas prices have been up it seems like, since 2020. Since longer than that, even. Gas has been over $3 a gallon for what seems like 15 years at this point. So there is a ticker that you can track or watch if you want to track gasoline prices. But we'll see what happens. He wants a weaker dollar, so maybe there's something in there with that. Oil is largely tied to the US dollar. But yeah, it definitely looks like it's definitely trying to break down here, make a fresh multi-quarter low anyways. It's hard for me to think it's going to go much lower than 55, but we'll see. Only time will tell. Only time will tell. All right, what's Bitcoin doing now? Did it rally back up? It is rallying back up. So it's trying to reclaim the weekly VWAP here. This would be very good for Bitcoin for this week. If it can reclaim and hold that, that would be good. Weekly support is right here. So I assume a lot of people are trying to buy that level up. Weekly support is just the lowest closing weekly candle. That's how we define our support resistance zones. They're more objective that way than just looking for a bunch of random hourly wicks. We'll see if it holds. Today's just Tuesday, so in a sense, you're just retracing what you lost yesterday. As long as you're trading under the midpoint of yesterday, you're still threatening a deeper correction, right? For the weekly range. So obviously, I would love to see Bitcoin closing candles up in here. If that could happen, then maybe I could make the case to look for bullish entries on Bitcoin moving forward, like tomorrow and Thursday. If Bitcoin fails here and rolls over today, it's going to look really bad. Because at that point, you would be trending. The early week would be trending, and it would be trending under weekly support. So that brings that weekly low in as the target. We'll see what happens here. But I have a short on Fartcoin to catch a downside break on Bitcoin. I don't have anything long to mitigate that long side risk or that long side exposure. Pingu hasn't made a fresh day low yet. So maybe that's 8:30. I don't know. Pingu's really weak. Maybe Ethereum. What's it doing? So Ethereum did kind of put in that super deep low close at 8:30. Then here's your 9:30 open. We're still real early. The market's only been open 15 minutes. See what the VIX is doing. The VIX is up to 1730. So the VIX, S&P's rolling over here. VIX is above the yearly open. I don't know where the yearly open went on the VIX chart. That's so weird. Because I don't remember deleting it. Oh. There we go. I had all the lines hidden like a dumbass when I was on that dollar chart. But yeah, VIX is back above yearly open here. So your S&P is kind of rolling over a little bit. Downside low edge of the expected range for the S&P is 67.19. That's also where your daily 21 exponential was. I don't know if it's still there. Let's see. No, you're under it. Hang on, let's get it up to where it needs to be before we get out of it. Yeah, you've lost it. That seems to be where this selling pressure is coming from today. You can see how it traded up, tagged that weekly open, and rejected. So as long as we're trading under November's high, right here, previous month high, as long as we're trading under that, we're going to have a near-term weaker bias on the S&P. Long-term, we think asset values are going to grow. In a rate-cutting environment, yeah. Especially if inflation starts to spike. That's only going to help asset valuations. I mean, you can see what gold's doing today alone. And gold's getting really close to breaking out. Again. I don't think it will, but I actually thought it would require a little bit more time in this range. But it doesn't matter what I think. What matters is what it's doing. And what it's doing is it's trying to break out here. If you look at silver, it has already broken out. Like, silver is just on an absolute tear here. Absolute tear. I can remember this year when silver was trading at 30 bucks. It's insane. Huge move on gold, silver, all the precious metals probably. Yeah, so gold could be looking to do something like this. It doesn't seem like it would, but I mean, it's already had a phenomenal run this year. But it doesn't matter what we think it should do, right? It matters what it's doing. Last week, you made a fresh week high, a high week close. Like, that trend is holding. You're about to liquidate last week's high. If you tear from that, it's up she goes. $43.50, and that's going to be $43.53. So that's the level they're looking to break on gold. Bitcoin's testing 4-hour resistance right now. That's a good close on Bitcoin. And the fact that Bitcoin held just shy of testing that last 4-hour open, that smells of strength, not weakness. So, like, basically, if I was looking for downside continuation on Bitcoin, I would have literally needed it to see it trade down below this level. So if you go into like the smaller time frame charts, you're going to see how it traded right down to that and stopped. Like, that would have been a buying opportunity for us if we would have had a long side bias this morning. We didn't. We were kind of neutral because you're literally testing the weekly VWAP here. And no matter what it did yesterday, this price is going to be important for us moving forward. As if you're trading above 87.035, we're going to be looking to buy intraday dips. Even though we lost this way up here. So what happens today is going to be super important on Bitcoin. Risk markets also rebounding. So things are looking like they want to take off to the upside here. Could you be a buyer on Bonk? Yeah, down there. See, Bonk did do what I would have wanted to see. So Bonk did take that out, but it did bounce. And Pingu's back up too. So it come in just shy. And then the Fartcoin trade just is not working out. So Fartcoin looks like it has put in a low here. It could still find resistance, but It's going to be important what Bitcoin does. Yeah, that's a strong looking hourly candle. Sorry about that. Bottle of water got away from me. Dollar breaking down could be what's putting strength under these today. Ooh, we could probably try to get long Ethereum. We could watch Ethereum here. As long as it doesn't trend under that point, we could look for near-term longs. I need a pullback to there at the very minimum. I can't chase it up here. What's dominance doing today? First and foremost, dominance is strong. So since dominance is strong, it could put pressure on Ethereum. For Ethereum trades, it's best to make those longs on days that dominance is weak. Ethereum can still be strong even if dominance is too, but it just helps. Like, it would be a lot easier for me to put a long on Ethereum if dominance was neutral right now and not literally spiking. But because it's spiking, it could put a little bit of that downside pressure on ETH. And ETH is still structured full on like a short here. So the markets aren't simple to trade in this range. All right, today. It just... give it a little bit more time. This thing could fail here. I don't think it wants to, but we'll see what it does. Oh, and TLT. Yeah, so you guys got the idea here with Bitcoin volatility. As long as it's tightening up like this, Bitcoin, good long-term growth. Okay, TLT, because we have a long side bias on this. But it is struggling. So it took out Friday's low. It needs to stay above that point. If it starts trending under 87.20, then I'm going to have to cut loose of that long position on TLT. Today it looks okay. As long as it liquidates the low and then has a bullish bounce, I'm okay with holding it. But it needs to start to trend away from Friday's low. The more time it spends down here, the more less that I'm going to want to hold that long. So hopefully TLT can put in a nice bullish reversal today. It looks good right here, right now. It looks good. I mean, you're putting in a fresh day high here. It's not a pre-market high. It's day high. We need to break through this for sure. I would love to see it up at about 87.71 by the end of the day. If that happens, then I'll hold the long. If it looks like it's going to close under 87.20, then I'm going to exit that long. I'm just holding long calls. Far out in time, like 45 days. It's not super far out, but... if the Fed's cutting interest rates, I think they're going to buy this. But I could be wrong, obviously. So make sure your risk is mitigated if you're trying to take the long on TLT today. Just understand that this is my risk point. We start trending under that, then I'm cutting that long loose. I'm getting out of it. But we'll see. You do have one of the most beautiful head and shoulder formations that I've seen in a long time. Right? And then a measured move of this puts you like down near those monthly lows, which isn't great. These monthly lows down here, not great. Measured move puts you down at about 85.64, and that's a measured move from a head and shoulders breakdown. So it looks bad. And if you pull up moving averages, it also looks bad. It looks like it's losing the fight. Weekly, losing the fight here. It needs to hold support. Needs to hold support. A very important day for TLT. Looks bad. Looks rough. They did cut interest rates, so this is okay for near-term volatility. All right, we're getting closer to testing that 30-minute support that we want to see. 29,920 on Coinbase, and then on weeks, that price would be 29.19. Love that it grinded here, put in this bear trap, and then confirmed it as a trap. So in theory, if it's going to bounce, it should bounce here. You could take the long there and set your stop at the low of day. You would only be risking a very small percentage of your portfolio. We're trying to grow the accounts by taking trades, not get rich from taking one trade. I got to get down there. I can't chase it up here. So it needs to come down here. It might not, but it just did a minute ago. I just was talking, wasn't paying attention. Let's check volume and see if volume or at least tells us it could be a long. Oh, I don't even have volume deltas on this chart. Volume deltas are negative, but they're not intensely negative, so that's okay. If the POC is down there, I will be okay with taking the long. It shouldn't be. It should be a sell, right? Because of the structure. But I got that fart coin short on, so if these are going to roll over, the fart coin will hopefully go with it. POC is right here. I don't love that. Let me see where it is on the 15. Yeah, I don't love where POC is. POC just means point of control. You can see volume spike here just now. So people are trying to sell this because it's the value area high. So this is going to be a difficult buy, to be honest with you. Looking at the chart. The chart, everything about this chart says do not buy this. Even your deltas are saying do not buy this. So in a scenario like this, I would more or less sit on my hands. But because we're live and I'm trying to take a trade every day while we're live, I will buy Ethereum. I just don't love the trade. And I will only buy it if it tests this price. So I'll set a long entry out there at 29.22. About an equal size position that I have on Farcoin. This way, they're just hedged. I'm just hedging off the short exposure only. And that will only happen if we get a very near-term correction. All right, limit order is out. So if it pulls back into here, I'll get filled. And I'll risk $30 because that's what I risk. I risk 30 and I can get stopped out up to 3 times. So daily average loss is $100. daily gain 300. So it's like a 3-to-1 risk to reward. And it would be a fresh trade, as this position was taken on Friday and then again yesterday. So that counts for those days. We're neutral on the day. We don't have any fresh trades open. I generally don't like to get long or short right before a ginormous news announcement, because volatilities are just too much volatility. I don't want to buy this because that's a sell for me every day, 7 days a week. You give me this setup, this structure, I'm shorting it. I wouldn't be shorting it here. I would have been looking to short it here. Right? There is where my short entry would have been. So I would have entered on the short right there for the normal setup. This is counter trend, counterintuitive, counter everything. I'm only telling you that for those of you that are thinking about taking this with me. Understand the risk is real. Come on down. Go ahead and fill me. And stop me out. I didn't get filled. Fartcoin is still well above that previous 4-hour high. Fartcoin still looks okay for upside continuation. Very close to getting a fill in this trade. Like, I don't know why I didn't get filled. Oh, I can see why. It didn't get me. 29.22 even. It was 60 cents away. I'm going to move it up just a hair. All right, let me check out some questions. Good morning, Tom. How you been, my friend? Good morning, KJY. How are you? When you set your weekly range to do... Wait, when you set your weekly range, do you just set the candles to weekly and set the line? Are you talking about the VWAP? The open? It's you want to set it to the open of the week. Yes, it's an anchored VWAP, so you just got to go to that weekly open time. For me, that's Sunday evening at 1900 hours. So you would just pull up that candle, right? So that's Saturday. Right here is Sunday, 1900 hours. So that's the weekly open. Right there's the open of the week. So basically you just grab the anchored VWAP and then you can drop it anywhere. It just has to be on that opening price. And it will anchor it automatically to where it's supposed to go. Yes. And another thing, if you're putting this on and it ain't showing up, then whatever exchange you're on, they don't offer volume data. Most crypto exchanges do offer volume data. I'm only saying that for my Forex.com folks out there, because Forex.com does not give out data on volume. It's proprietary, so they say. I think it's scandalous. This day and age, why would you hide something as small as volume? But it means everything for their business model, right? They get paid on volume. So it looks like it just literally did not fill me, and it's just going to go without me. So on the Coinbase data feed, it didn't even get there. On the week's data feed, it did. I was just literally 60 cents too low to get that fill, which is really annoying. I still can't chase it. It's got to be there or nowhere for me. I don't even like the trade, but I don't like it up here. That's for damn sure. Yeah. Might have missed it. It is what it is. I wouldn't doubt it at all blowing up today simply because everybody's looking for the short. Now that you got huge following creators out there blaming market makers for selling Bitcoin at exactly 10 o'clock. If I was manipulating the price, I would literally be long today at 10 o'clock. Just because of those influencers saying that garbage. Market makers, guys, they don't get paid by directional bias trades. They get paid on the spread. They don't care what the asset does. They are on both the bid and the ask. And their deltas are hedged out completely. They are simply getting paid to offer liquidity at both the bid and the ask. That's how Jane Street gets paid. They are not manipulating price to go down because they're trying to kill Bitcoin. That's the dumbest shit I've ever heard. If they are manipulating the price of Bitcoin to go down, they're doing it simply because they want to buy your Bitcoin. Literally. And you are selling it to them based on what huge following accounts are saying. I can't, and they're all repeating it for verbatim. It annoys me to death. They do retail traders such a disservice. Oil target hit. Nice job. But yeah, Steven, if that doesn't work for you, just drop another question in the chat, and I will see what's going on. Why it should be working. Coinbase does offer volume, and it's a volume weighted average. So it's just like any other indicator, right? It's just like the 21 daily or the 21 EMA daily. Sometimes price is going to reject there, sometimes it ain't. We're not taking trades based on where the VWAP is. We just want the VWAP on the chart to tell us who's in control of order flow. You should be able to just look at the weekly range and identify. Because to be honest with you, if the weekly candle is bearish, then at least up until that point, order flow has been bearish. We never know when the market's going to reverse direction, right? But for trend following strategies, you typically want to trade in that direction of the trend. Today's just Tuesday, so the weekly range low could have literally been set today. Or yesterday, actually, in this case. Oh, no, it was today. That happened at 2300 hours, so that would have been today's candle. Looks like yesterday's low is right there. So yeah, this is today's low. So Could today have just liquidated yesterday's low and that ended up being the low of the week? Absolutely. And if that's the case, then we're in for a glorious upside weekly range. But only time will tell. Only time will tell. There is a significant amount of sell side pressure on it because of what its price is doing, right? Because price looks so juicy for the short, essentially. It looks like it's almost a guaranteed thing at this point that it's going to happen. But I used to look last year specifically. We did it a little bit at the beginning of this year. We looked to fade the weekly low or high every Tuesday. That was a trade that we would put on every Tuesday. We would fade the weekly high or low. So that's the same trade we're taking today, right? We're looking to fade the weekly low. This is the weekly low for right now. But we want to take the opposite direction. That's what fading is. But this year, the data did not show us that. Last year, the data was much better for that trade successfully playing out. It played out a lot more often than it did this year. This year, it only worked about 25% of the time. Where if you faded the weekly high or low Tuesday morning, it only worked 25% of the time. Which isn't good. It's not good. It's not a good hit rate. You typically don't want to be looking for weekly lows, especially if the market is trending in that direction, like for multiple months. But we'll see if we get the fill. Very choppy here this morning. Like I said, I actually thought it would be super volatile, but it's the exact opposite. It's super choppy. This is because you have people trying to take the short right here, right now. They're looking for that downside continuation trade. They're looking literally to short the high of day. And they want the week to be down for the rest of the week. The problem is they're taking that short right into support. This is support until you break down below it. It's support. It's a big support. It's weekly support. You've not been able to close a weekly candle under that price since that candle did it. And you have been under that price 1, 2, 3 times. All right, Ethereum's starting to push lower again. Barcoin's still just taking its time. See, I'm not seeing a big volume spike up here. I don't love that. It looks like they bought the London session open, right? Because here's your London session open. So they bought Fartcoin in London. And so far, New York is agreeing with that move. That's your New York open. And your volume did start to spike, but it just dried up. So it doesn't look like the sellers are hammering this like I would want to see, especially knowing that daily 21 EMA is right there. Like this was a breakdown yesterday. You tested support, it held, and then you broke down. So this would literally be where I'd want to see that volume spiking. All right, East getting ready to fill me on that long. Which, it is what it is, right? Come on, fill me. Get it done. Get it over with. You better get down there. I'm going to be so mad if this thing doesn't fill me. Okay, we're filled. Whoa, we're not filled with enough. That might end up working out to our benefit here. We got to set a stop loss. $31. That's what we risk here. We're going to have to go in there with a lot more than that. So this stop loss is going to have to go up now. I just want to see what the dollar's doing. Dollar's bouncing off of that trend line. Yeah, that's about where I need it to be to lose $30 if I'm wrong. So it's because the position size was not big enough. It's big enough now. But because I had to make it bigger means that my stop loss had to be much tighter than I wanted it to be. Generally speaking, I'm okay with this entry. It's just a difficult trade to make because of this wick. You see what I'm saying? Like, I generally don't mind buying this price. Like, I have no problem with it at all. But you can see how tight my stop is up against. It's like right there. It's right up against my entry. And I do not like that. But it is what it is. Just a freaking flash wick down to run the low of day is going to do more than just, yeah, it'd be terrible. With 5-minute volatilities. And let's not forget, we did get a higher inflation number, or a higher unemployment. It went up to 4.6. So it was 0.2%. 0.2 of a point higher. Which 1/10 to me wouldn't really matter. 0.2 is a little bit more aggressive. But I'm okay with being long Ethereum if TLT continues its upward move. And if risk bounces. But risk is coming back down kind of hard here. So we're going to more than likely eat a stop on Ethereum. Well, we'll see. We'll give it time to work and see what happens. Like I said, technically speaking, I would want to be selling that high day, not looking for the short. I mean, not looking for the long. But we have that short trade on right here. So if these things roll over, then we should be okay. Yeah, I kind of figured that was going to happen. That's so tight. There's no way this trade stays open. There's no way. Yeah, there's literally no way, bro. No way, Jose. We're getting stopped out for sure. You know those sellers, though, they are chomping at the bit right here. Anybody that sold this wick high right there, they just seeing this sideways stuff, they're just getting madder and madder every second that goes by. Come on, man, that's a 5-minute supply zone. I agree with them. It is. I actually agree with their trade. Dominance is still firming up too. I just don't understand it. We should already be stopped out of that. That is too tight, dude. Too tight. That's what she said. I'm a few minutes behind on the replay, but TLT has another dividend coming by the end of this week. It wouldn't surprise me to see it continue its downtrend after. Why? Since the next EX div is in February. Yeah, but wouldn't that be counterintuitive as to what the Fed is doing with interest rates? Since the TLT is the 20-year yield inverse? Wouldn't a downtrending TLT be opposing what the Fed is doing? So, like, I'm not saying that you're wrong. You could be absolutely right. I'm not taking the trade based on dividend risk. I'm taking the trade based on what the Fed is doing. The Fed is cutting interest rates. The Fed is saying you should be long yield, or you should be short yields, and in order to short yields you got to be long TLT. It just doesn't look good because of that head and shoulders breakdown. So the Fed isn't going to adjust their rate policy based on what it's done so far. But if the TLT continues to print fresh lows this month, going into January, then they may pause rate cuts while this near-term volatility susses itself out. Okay, we're stopped on Ethereum right there. Knew it was coming, man. You can't spend 20 minutes bouncing off that level without at least making a fresh low. That stop was just too tight. That stop should have never been that tight, but it is what it is. We can take another stab at it a little bit lower, but these wicks just don't really provide a great entry point. And I don't like the technical structure, to be honest with you, but I do want to get let's see, there's 2 minutes left on this right here. So I can give it a little bit more time to play out and see what the next 30-minute candle does. If the next 30-minute candle looks like it's going to close up in here, then I will most likely chase Ethereum. If it opens and continues to roll over, then I definitely don't want to chase Ethereum. If that makes sense. Because if this structure, if this is showing us that it wants to break to the upside, then there's a big chance that Ethereum wants to do the same thing. And we've already seen Ethereum struggle, right, to put in a downside continuation below this point. You're doing it right this second, but let's be honest, a lot of time has went on here, and it's still bouncing here. So this is clearly a level that the market likes, right? We just got to go in with a smaller position, unfortunately, and leave a wide stop. A wider stop. We'll see what it does. But if Fartcoin, like I said, if it, because you got 47 seconds on this close, if the next 30-minute period dumps, then we don't want to chase Ethereum. So you're already looking like you're going to get a higher close here. But it's the next 30 minutes that I don't want to short. I mean, I'm already short Fartcoin, but it looks good. It looks like it wants to go up. And Bitcoin is also posting it up here like that. So this is completely within the norm of an upside continuation move. It's when you're trading under the lows, that's when things start to get a little bit more risky. So if it does give a good solid breakdown, like a boom, like a candle close down into here, like we don't want no part of it. Because at that point, the sellers are winning. Their target is just fresh day low, and it's just right here. So anybody that sold this or sold this, they're looking for downside continuation. And so far, they're getting it. So far, they're getting that. We don't want to chase it unless this starts to expand and makes fresh day highs. It's going to be a tricky one to pull off, too. You're pretty much just going to have to buy it and get a lower stop, but I'll leave that up to you. The technical picture doesn't look like a long. But this is literally a support test and so far hold. So 1, 2, that's a solid hour. You've been trying to break under this. Like I said, if I was short from here, I would be very annoyed with this. I would like the look. I would love how it looks, but I'd be annoyed that it's fidgeting so much there? I would have to at least go out there and see why. Why is it fidgeting right there? It's 4-hour support. Technically speaking, this should hold as support. There's 27 minutes left on this candle's close, because this is a trap. That's a break and close under, and then you took out the high. So if this is going to be, but you've already taken out that candle's low. It's just, this is intraday volatility. It's impossible. So there's your lowest close. That's where the support is until you get a lower close. 26 minutes left. So you're going to have 4 more 5-minute candles. You got value area low down there, but 4-hour support is definitely the level. It's the last buying opportunity without chasing it up into here. Because if it breaks up into here, it's probably going to give a significant break. That is if the dominance chart starts to weaken. It's not weakening. It's, well, it is right here this second, but if you look at it on 30-minute, that's a higher close. You're literally at the highs. So this right here could put pressure on Ethereum. Ethereum does good when this chart is melting like an ice cube. That's when Ethereum has those huge spikes. This thing has been so nasty for so long. Resistance. Maybe we should put the high on. Ethereum is down 1% too. Farcoin trying to give it the upside continuation. This should be resistance, or at least acting like it, but I'm just not seeing the spike on volume. Maybe it's happening on the smaller time frame charts. Not really. Not really. The big selling happened down here. And they've been stalked, most likely. That's a pretty big move on Farcoin. Maybe not. Haven't been stopped just yet. So this bounce is nothing to me yet. I mean, you're right here, right? You're sticking within this range. As long as you're in this range, you've done nothing. Above that high, then you can start to say, oh, okay. But anywhere in here, this is another place for sellers to attack. Anybody that missed this trade, anybody that missed this trade, they are now going to be putting that trade on right here. See, this is why I wish you guys would get off those small time frame charts. It's just so much clearer to see what is happening on these charts. Like if you did get that long off down here, your goal, or at least on the very near term, what you want to see is this high get breached. You want to see this candle trading up in here. It needs to get all the way up to there. As long as it's staying under this close, you're just retesting this range. This is very tight trading, but it's just so much easier to see what's going on. 5-minute charts, they'll scam you. Like I said, I'm okay with it, and I don't want to chase Ethereum if this starts to push down into here. Okay. Hello, boss. Please, does the anchored volume profile, same as a session volume profile? No, they're not the same indicators. This is a session volume profile. It just gives you the volume inside the daily range. And shows you where the most volume traded at inside the daily range. The anchored volume weighted average price, this green line right here, it's just another average. It's like an exponential or a simple moving average. The only difference is this is calculated by volume and not by price. So these averages, this is an average of price. This is an average of volume. All this shows us literally is price consistently making higher highs above it or lower lows under it, right? So right now you're in a period where it looks like the buyers have won, right? Because you've broken out, you've closed above it. You even got another upside higher close. But in reality, this could still just be a fake out. So right now for the weekly trend is down. And the volume says it should be. So later on today, if this starts to trend back under this, and when I say trend, I mean gets down into here, and then maybe down into here, then you will see how that ended up being a failure point. If support ends up holding here, we don't take trades on this level. We don't like it on this candle when it wicked up into the VWAP. We would not have shorted that. We need an objective level. So the short is still here, right? And since you're so far above it at this point, your short has been almost evaporated. Like it almost just isn't it anymore. Because now it looks like it wants to come up here and test the open. Because this is your weekly open right here. So if you're above this, the next level that we would expect the trade to take place is up here. So we're not using this average to enter trades. We're only using this average to identify who is in control of order flow. Okay. But this is where you mitigate risk from on the short or up here. There's really not a whole lot you can do with what's going on in here. A close above this is an expansion higher. It's obviously failing, but it could still hold. It could hold right here where my crosshairs are. If it starts to dump like it's doing, then it should not even slow down right here. If it's going to go up, then you probably won't go lower than this wick low. You can, and it could still go up, but I'm just saying, if it's that strong of a bullish trend, you probably won't make a lower low here. And you haven't yet. Now, I wouldn't get long based on the 30-minute chart. We use the 4-hour to situate our areas of interest. That's why on Ethereum, we're okay with buying here because it's the 4-hour support. We'll know if we're wrong once you start closing 30-minute candles back under that, or even 5-minute candles. Like, if you just start closing candles under this price, then we know we don't want to hold longs. Because as you can see, with where we currently are inside the weekly range, order flow is extremely weak. But it could spike hard. And it will spike hard, depending on how many people are short. See, it's getting to the point now, like, if I wouldn't have shorted this, which I would have, I've already said, if I was looking for the short, that's where I would have put it on. And then my take profit level would have been just short of the day low. So instead of targeting this wick low, I would have put my take profit up higher. So short would have been put on there, and it would have hit profit targets here. Because that's what we were looking for. We were looking for it to reject here and expand lower. We might not have gotten that trade-off perfectly, obviously. Yeah, we would have. Absolutely. Our trade target would have been 2%. Right in here. So that's the setup. We would have been looking for a 2% move lower under that line. So this candle would have filled us on our take profit. So now basically, as long as price refuses to go under this point, we can hold along. We don't know that it won't later. Like any point in time, this thing could just open and puke, right? That's what we can never do. We can never predict what the market will do. But with this structure, it tells us it's a lot more weak than it is strong. Well, we know that because of what it did yesterday. You didn't do anything really today. Today is just a continuation of what happened yesterday. So very tight range. This was a pretty significant move lower. This makes people bearish. So that lines up the shorts perfectly. Why I even decided to say let's look for a long and let's look for it here is to hedge off the Fartcoin short. We have a short side bias on this, and will have until price starts trending higher above $3,000. But since Fartcoin isn't rolling over here, right? Since it's still trying to go up, we want to hedge this short risk off. And the way to do that is to get long another crypto, Pingu, Bonk, Ethereum, or Bitcoin, right? The only one that was setting up at an objective level that we watch was Ethereum. It was the only one. So that's why we chose Ethereum. We got stopped out of it because the stop was too tight, but I mean, I sent it right back on with a wider stop, but a much smaller position size. So it's really just going to basically be a net neutral day, essentially. Unless there's a big breakout, like a big breakdown or a big breakout upward. But this is starting to look more constructive because now we've broken out of that last 30-minute range. So if I was short right here, I would definitely be sweating this candle, wouldn't you? Especially after this candle did so good. Took out the low and everything. This point of control definitely makes it a difficult short or long, because it's literally in the middle of the daily range. So it's anybody's guess. It's literally a 50-50 shot who wins today. Experience, like I said earlier, we used to fade the Tuesday low or the Tuesday high. It just depended on what was the market doing Tuesday morning at the New York session. Was it making a fresh weekly high or was it making a fresh weekly low? Whatever it was doing, we would fade that because we knew last year, not this year. Last year, we knew that it happened frequently, like over 40% of the time. If you're setting a fresh weekly low on Tuesday, you can buy that. And there was a really good chance, at least 40% of the time, that would end up being the low of the week. Right? So we used all of that and said, yeah, screw it. We can get long right here. And hedge off that fart coin. Because I had no long position on the futures account. So net, they're neutral. They're neutral. But if the fart coin position gets stopped out, then I'll lose whatever unrealized P&L I have open on that trade, but it's not much. Whereas if Ethereum breaks out and has a decent breakout day, then we will recapture that unrealized P&L into the Ethereum trade. Already made $790 on the fart coin short this week. This week just started, I realize that, but I'm just saying. So sometimes you're going to have to hedge. Like if you can't just have a straight one-sided bias ever. Last week was one of the most difficult trading weeks because it was literally anybody's guess all week long what the assets were going to do. Just look at Bitcoin on the daily, delete everything, and just look at Monday, which is here, to Saturday, right? So there's your Monday candle. This is what you did all week last week. Just you stayed trading literally from 89,482 up to 94. So a $5,000 range, but still there was only one day of expansion. The rest of them were just choppy. And then ultimately Friday you dumped back down. So this is a BART. Right? That's what a Bart Simpson pattern is when price goes burnt. Or burnt, right? And then you get the Bart Simpson eyeball and then the little Bart Simpson nose. And then you get what I'm saying, right? Like you've seen it all over the internet. That's a BART pattern. And that's what we did last week. These are very difficult trading ranges. However, if you get into a period like this, right? Here's Monday, one day up, Tuesday you open, this would have been your weekly high. Right there, that wick, that's your weekly high. So if you would have faded the fresh week high on Tuesday, this was the fresh week high, you would have faded that trade. That was literally the only trade you needed to take all week. So you would have been mitigating your risk from 106,691. And it looked really good because it closed down under Monday's low. So Wednesday opened up. As long as Wednesday stayed under Monday's close, which it did, your short was safe. You did not have to adjust it, move it, change it, or do anything to it. It's literally safe. And then you close down here, and then same for Thursday, Friday. So literally every day that week was a downtrending move. So when this happens, trading is easy. A newborn baby can make money in markets like this. Anybody can. Hell, I got short on Tuesday at Monday's high. Good for you, bro. You know what I mean? When it's not doing that, it's difficult, even for me, for any trader, because you're not getting the continuation. This literally is the continuation. So here we are again. Here's Monday, right here. So what we're trying to do as an intra-week trader is suss out market direction. Which way is Bitcoin going to go? It can only do two things. It can only either do that or this. Or I guess the third thing is it doesn't do anything, right? It just does this all week, which is literally what it did last week. So as of right now, as long as you're trading under here and up here, really. Let me put these on here. As long as you're trading under here or here, your bias has to be down. This is your target. Has to be. It's the only logical conclusion to come up with. Now, if Bitcoin closes today up in here, then you got a whole new ball of wax, don't you? Because the market opened up, set in the weekly high, and rolled over and put in a downside continuation move. So in theory, Bitcoin should roll over before it gets here. If it doesn't, then the sellers yesterday are at risk of being smoked. That will help us Wednesday, looking for upside continuation. So right now the markets are in price discovery. I don't care how good of a trader you are. I don't care how good of a price action analyst you are. None of us know what price is ever going to do. All we can do is mitigate our risk. That's it. That's all I do. I do it more successfully than you do. But you can do it just as, if not better, than I do, because I'm human. I still sometimes overtrade, use my own emotions to basically overtrade the markets and all kinds of stuff. Like, I screw up too still, and I've been doing this shit for years. I get mad at these things too, especially when I'm publicly telling everybody, oh, you should look to be a buyer at weekly support, or, you know, and then it dumps all week. I leave the post up. Obviously, I'm not going to go out there and delete it. If anybody wants to know what I'm doing all you got to do is come watch the stream. We do this shit live 6 days a week. 2 days a week publicly, 3 days a week, or the rest of the week privately. But still, we're live every day. And we're looking for opportunities every single day. So this would legitimately be a short side entry potential on Bitcoin. Right? Because it is an objective price point. That is the weekly open. The problem is it's starting to look like what? There's a break above. Traded under. Traded under. Traded under. And then, boom, higher close. What does this candle do? It opens up, puts in a very small wick lower, boom. So as of right now, it looks like the buyers are winning. They're fading the Tuesday low. They're looking to buy the weekly low. Only time will dictate if they're right or wrong. Bitcoin could roll over right here and make a fresh day low still. It's getting a little bit late in the session to be putting on new trades. But yeah, it's just up to us to mitigate how much we risk when we risk it. That's all we can do. No indicator alive is going to tell you which direction price is going to go. If that's what you're looking for, you're not going to find it, even in the VWAP. But the VWAP can help you if you struggle with identifying what price is doing. It can help you. It can show you literally what's going on. I tell anybody that wants to become an intraday or an intra week, like a swing trader, swing trading is going to be a little bit less difficult than day trading, but it's still more significantly harder than just trying to buy and hold, right? People learn like the worst strategies that you can think about. They learn those and then they half the time don't even implement them. So that's kind of good because at least then you can mold them into looking for what matters. But yeah, this is your weekly open. So right now, at least on the near term, definitely looks like Bitcoin is trying to change direction here. But as long as it's trading under this point right here, it has done nothing. This can be chalked up as just what? Intraday volatility. Intraday chaos. We used to call this stuff random market violence. Because now that it's smoked the sellers that sold the NFP print, it could literally roll over and go get those buyers. So most of the time, you're not going to know or even have a trend direction for the weekly range on Tuesday. At best, you're going to have a current week high and a current week low and the open. Those are the only 3 data points you're going to have. And you're going to have to use other tools to go in there, pick that range apart, and assess where you're going to put that risk on and where you're not. So like here, it looked like it was going down for sure, didn't it? It damn sure did. And then up it goes. But we kind of figured it would based on what Fartcoin gave us. Remember, it was in this candle that I said, if this candle opens and stays above here, then I do want to chase Ethereum, right? I want to chase Ethereum higher. If this candle dumps under this low, then I don't want to buy Ethereum because this could be rolling over. It hasn't spent enough time trading above the VWAP to say anything yet. You could close a 4-hour candle above and then dump. So here's what we got on the 4-hour right now. This was our point to look for shorts. It failed. So our next place to look for shorts is here. Not here and not here. Not here either. It's only here. It's either here or here. Because now moving on, what do you got? Well, if I control Z, and control Z, right? Now, what is game, set, match here? Well, as long as price stays above this point, you could be a buyer on this 4-hour candle if it pulls all the way back down to here. Because now the market has just set a new trading range. Would I be a buyer here with resistance right there? Probably not. I still think the best trade to be would be wait to see what happens here. Because as of right now, the trend is still down, but you've almost said nuh-uh to that. So to hedge this short risk off, I decided to go long here. I got stopped out on the first attempt, but then I just shrunk the position and threw another entry up there. Boom. Because I can lose up to 3 trades because I break my risk down in chunks. That gives me 3 attempts to nail the daily range. And if I'm right, and the position size is right, theoretically speaking, it shouldn't need to go very high for me to get my $300 out of the market. I don't need a ginormous breakout to come up here. I just needed to go a little bit higher. Well, a lot bit higher. The first entry would have been better if it would have worked, but that stop was just too tight. I could look at it and tell it was going to be too tight. I mean, Jesus, it was right here. It was way too tight. It's 20x leverage. 20x leverage is no joke. It makes it, the more leverage you apply, the smaller your risk is going to be, or the smaller your stop loss is going to be. That's why using less leverage and a smaller position size gives you a lot more leeway. So if I were to use 10x leverage and half a position size, my stop could have been all the way down here, and we would still be sitting in the long from the first attempt. That doesn't mean we're going to make money still. Like, I can never predict when I will make money. That's not what I'm trying to do. What I'm trying to do is just limit how much I lose every single day. That is it. That is the edge. That is the Noah's Ark, if you will, or the other thing that everybody the Holy Grail. That, if you're looking for a Holy Grail in trading, that is it. Risk less. That's the Holy Grail. Stop trying to get rich. That is literally it. Because you're never, ever going to be able to predict, not even 1 second into the future. If I could just predict 1 second into the future, I'd be the richest man on the planet. Because I would know what price to exit 1 second later. I would always be 1 second ahead of everybody. That would give me a huge edge. Because I know exactly what price it's going to stop at. All right? That would give me a massive edge. Give me an hour in time, and I'll make $1 trillion this year. And this year is almost over. 1 hour. Just give me 1 hour look ahead period. I will make $1 trillion before December's out. No indicator and no trading strategy in the world will ever tell you that data. Nothing. We just look for very opportunistic places to put the risk on, and we eat our stops when we're wrong. We don't force it. But if you're doing the risk the right way and you're risking very little, you can take more than one shot at it. Back in the old days, when I first started this YouTube channel, we would have got long here and the stop would have been way down here, right? But in order to get our $300, we would need a move all the way up here, which is not going to happen, most likely. Ethereum has already moved pretty much what it is going to move all day because of standard deviations and options pricing and all of these other hedging things out there. A standard deviation move is all you're usually ever going to get. So yesterday was a lot bigger move than would have been expected, right? You can see, look how much bigger yesterday's range is compared to Sunday's range, for instance. It's ginormous. It's almost, you can almost fit 4 Sundays inside of yesterday's range alone. This was an outsized abnormal move. Abnormal. You can find out how big the day ranges are. That's helpful info. Well, not with these indicators, but the true range indicator, average true range, about $179 is what it's moving right now on a 14-day trailing average. So you could move more today because you've only moved about $100, and we know it could move another $75. So you might put in another $75 move up, or you may just close as this inside this today. It doesn't really matter. However it closes will give us more data, and we'll take that data into Wednesday, right? We'll know, like, we'll either know, hey, did it get up here? Did it close back above the weekly open? If so, we're probably looking to be a buyer on Wednesday on any pullback into or around Tuesday's open. If Tuesday closes down here, which looking at this data looks like it probably will still, don't fall into chasing bounces when a market is trending down. Those 3 days right there, always look back 3 days. What's the market doing? Right now, the market is clearly trending down with a bearish engulfing right here. So the trend is still heavily to the downside here. Still, the close is what's going to be important. But we could take a shot there because it was 4-hour support. It does not mean we will make 1 cent from this trade. This thing could dump. Like, yeah, we still have nothing here. It looks okay, but still very weak. It's weak mainly because the dominance is up. Dominance is not only up, it's making fresh highs. Every freaking candle is making a fresh high. So it is literally trending up. That's going to put weakness on Ethereum, or at the very minimum, it's going to keep Ethereum from being up 20% today. In order for Ethereum to be up 20%, this thing would need to dump. That doesn't look like it's going to happen. We're halfway through the day. A strong dominance puts pressure on alts. Anything that isn't Bitcoin is considered an alt. Some people don't consider Ethereum an alt. I do, because it's highly affected. It's not dominance that's affecting Ethereum. It's Ethereum that's affecting dominance, right? Dominance is like just, it does the opposite of what the alts do. So if dominance is super weak, alts are booming. If dominance is super strong, alts are weak. This isn't a tradable asset, so it's not Like, you don't have people coming in here buying this. Nobody's buying dominance. It's not a tradable asset. But this right here was telling us already that Ethereum is weak today. So that's a good looking close, but it ain't nothing. It still isn't nothing. So don't put too much weight on the indicator, and don't be taking entries off of it. Just use it to help guide your bias. As long as price is trading under it, you probably want to be a seller at the day high, because you're looking to capture the weekly range expansion. So far, the weekly range expansion has been lower. So if that's going to continue into the future, then you want to be a seller at highs, not a buyer at lows. You want to be a buyer at lows when the market is expanding upward. Upward. Okay? But yeah, it's a very good indicator. It helps. It helps dramatically. Helps dramatically. Let's go look at Fartcoin real quick. So now that we've got this trading range, we'll see what it does under pressure. I'm just kidding. It is under pressure. It is still under pressure. Even though this closes above, it doesn't mean anything, because we know traps exist. This right here is getting everybody that missed the short. They're probably getting super long right now. They shouldn't be. You can't really start looking for longs until you're consistently closing dailies above the 21 exponential. We just closed under it yesterday. So yesterday could be a trap. We don't know where the trap is yet. But if this ends up being the high of day, I'm going to be more than okay with setting in that Fartcoin short. I promise you that. More than okay with it, because look what this thing does. But occasionally, once the moving average comes into contact with price, you're going to have a good 4 days where that indicator is maybe going to help, maybe not, right? Very seldom are you going to have just a 1 day tag and then reverse. And that's unfortunately a way a lot of people trade. They'll wait for that moving average to get tagged and then they'll sell it. And then they'll get stopped out a day later. So we don't use the averages for entries. We just use them to help gain our bias. And as long as we're closing dailies under the daily 21, we have a bearish bias. And we look for that trend to continue throughout the week. If the week is going to be choppy, then we're going to eat stops. It's just going to happen. And then occasionally we're going to take the right side of the trade. We're going to get the right setup. It's going to be like Ethereum is a perfect short. In any other scenario, I would be looking, if I wasn't already short on Fartcoin, I would have absolutely been looking to sell Ethereum today. Absolutely. And that trade would have happened right there. That's not me cherry picking the trade. That's how I trade. And as long as price is trading under this line, then I would be more than okay with holding a short, because of how the averages are structured. So given what I've seen in the market throughout my entire career, what I would be expecting to happen here, if this is going to play out perfectly, is maybe tomorrow, if it stays sideways all day, like if this is your low and that ends up being your high at the close of today, I would be more than okay with selling a fresh day high. Like if Wednesday takes out Tuesday's high, I'd be okay with selling that, because I would assume it's about to put in that downside expansion move, right? So we try to anticipate that, and we look for those opportunistic areas, and then we mitigate our risk, because even with the best analysis, even with plenty of experience, you're still going to get ran over because of random market violence. Random market violence. Intraday chaos. You got millions of people putting on positions based on millions of different reasons. So, yeah. Let me see here. Notice you often don't place a stop loss at entry, but add it right after. Is that intentional? It's a really bad habit is what it is, to be honest with you. It's a really bad habit. In crypto with 20x leverage, you have to be super careful with doing that because I've seen 1 second ticks that will blow your account out. You're not going to be able to exit the trade quick enough if you don't have a stop out in the market. You see what I'm saying? So please don't do that. Is a terrible mistake that I make, and it's a habit. I do not want you to do that, especially if you're new in this, because what's going to happen is that will happen to you. It's happened to me. I've blown accounts because of not having a stop loss in enough time. I've also put entries out there randomly and left them and forgot about them and then woke up to a blown account the next day. Yeah, crypto is super volatile. You cannot even come close to being able to exit a trade quicker than that spike can happen. If you put an entry, you set that stop at the same time. Depending on also how much volatility is in the marketplace and all this. Like the VIX is expanding today. So the VIX is testing what we want to be resistance, but it still hasn't broken down. So since the VIX is still elevated, the VIX was at under $15 just 3 days ago. It's above 7. It's at 1684 right now. So it's elevated. An elevated vol, which is the VIX is just volatility. Elevated volatility means bigger spikes, bigger chaos, wider ranges. That's why yesterday was so big on Ethereum. Ethereum was down. I mean, from the open, it wasn't down huge, right? From the open, at one point, you were down almost 6%. But if you look at it in terms of from high to low, Ethereum is damn near down 10% yesterday. If you would have been buying as it was pushing down right here, you would have got ran over. You would have lost more than you intended to lose, more than likely. Right? Because look, most of that move happened in one candle. And then it spent the rest of the day just grinding lower. But the majority of that move happened fast. So if you would have been a buyer right there and then tried to be like, I'll just put my stop out if it, with 20x leverage, you got burnt. That's 2% drop times 20. Be careful if you're using a lot of leverage. If you can put an order out like on weeks, I don't do it because it's a bad habit, but you can put an order out to sell or to buy with a stop. It goes out with the order. That's the best way to do it. Sometimes you're going to get stopped too early. It is what it is, but I would rather you get stopped too early than get stopped way too late. You know what I mean? It's best to be early than be too late. Because what if it didn't just drop 2% quickly? What if it dropped 25% quickly? That's the stuff that blows you out. Like, you just get liquidated. Your broker does it for you. They're like, there goes all your money because you hit 70% worth drawdown. Like, you don't have to go all the way. It just needs to get within 70%. And they'll force close you. And they'll take all your money. Not just 70% of it. They'll take it all. Crypto's dangerous. But I've been doing it long enough time. I've built up big enough, big enough position or big enough whatever to where the most I'm ever going to blow out is $2,000 on no matter what position I take. That's the most. That's the way I have it situated. The $2,000 would be a terrible loss, but it's not going to blow me out. So that's why you see me not placing a stop loss, right? So like when I have you on my brokerage page, for instance, let me just show you real quick. So I still don't have a stop loss out here, right? You see that. So you should always, you can't see the order pane over here, but the order pane gives you the opportunity to set a buy or sell with a stop loss. You should do it that way. So that way, when your entry comes out here on limit, your stop loss is going to be there too. So like if this were to just turn around and puke dump on me because some terrible news, like Vitalik, whatever, decides he's done, he's going to cash out, or he dumps all of his Ethereum into the open market, I'm going to lose $2,000. And I'm going to lose it at 25.36. Right? Because I only have $2,000. Well, I don't even have $2,000 in here right now. It's just 12.48. Because like I every time I move money constantly in and out of this not in, always out, but so right now I'm only trading with $1,200. So if this were to dump on me, max loss would be $1,200. That's the max. But the account itself has 4,000 in it. But it's in this, that's still in spot. I leave it in spot. I only put max $2,000 into the futures. And then I leave my spot alone. My spot is just in case I blow the futures out. If I blow the futures out, I can pull $1,000 or whatever I need from spot into futures. And I just keep doing that until I build the spot position up to about 15. Then I wipe it out. I wipe the whole account out. I'll leave about $2,000 in. $1,000 in trading, $1,000 in spot. And then I build it back up to 15, then wipe it all out. I do that because I don't want to take the chance of losing more than $15,000. Because it's an offshore exchange. What happens if I try to log in and I can't log in? The money's just gone, right? At least this way, I've already more than made that money, so I'm okay with allowing them to steal that much from me, if you will. Trading in offshore exchanges, don't ever put more money than you're willing to lose on the exchange. Ever. If all you can afford to lose is $100, then you only put $100 on the exchange. Exchanges are dangerous. It might not even be the exchange's fault. It'll always be the exchange's fault if they get force liquidated themselves because Bitcoin, whatever, right? Whatever madness happens. You don't want to lose all your money with them. That's how so many people got burned on FTX. They had too much money on exchange. They felt as if though it would never collapse. I treat every exchange like it will collapse for sure. It's just a matter of time. You know what I mean? That's the way you gotta look at it. Like, every cent you have in the market, whether it's they are holding it for you or it's literally in the market, it is at risk. This is a dangerous game. It's not for the weak of heart. But, I mean, as far as getting money out, I have never had any problem with them. So I have a link if you want to use them. You can save fees or whatever. You can. It's in the description. But too many exchanges have went bonkers and people have lost so much money. It's hard. You know, most people don't trust that stuff. Be careful. Which would impact TLT? Oh, wait. Oh, I didn't read. Let me read. I gotta find you. Oh, you're a few minutes behind. I got you. You're a few minutes behind the replay, but TLT has another dividend. Okay, I read that part. Notice you often don't place. Okay, I read that. So that's where I was. With some added risk, OFC. Yeah, of course. Yeah. Just be careful if you don't put a stop loss out there. You could get wrecked. I promise you, it'll happen. The more often you do it, the more it's going to happen. 4 minutes behind again. The Fed's QE, not QE, is for bills, not bonds. TLT trades 20 to 30 year. 20. The TLT is the inverse to the 20-year T-bill. Or, sorry, it's right here, right? The 20-year yield. That's what the TLT is inverse. Yeah, I got that. They're cutting interest rates, though. That affects the long end of the curve. So it really affects the short end, but it also affects the long end. All you got to do is pull up the 30-year yield, not the bond, right? Not the bond. The bond, this is the bond. You don't want to pull this up. You want to pull up the 30-year yield and then compare that to the Fed funds rate, right? Go out long term. Change it to a line if you need to. Just, you can see that minus the volatilities, right? It pretty much does the same thing. So when they were raising through here, this thing stayed trading sideways. This is normal volatility. All of this. This moved lower. That didn't affect the Fed. They're not going to worry about that. They're not going to worry about this spike. They're not going to worry about that spike. As long as it's going in the same direction, they're good with it. Okay? But yes, them cutting interest rates ultimately should affect this. That's what I'm saying. So you can, this is when I started cutting right here. And then this was going up. So they have been cutting long enough now to where this should start topping out. If you get a gigantic spike up into above 5 on the 30-year yield, the Fed will pause. Then they'll wait to see how much more it spikes. And they'll pause. They will continue to pause until this either gets reined in and starts to head back in this direction, or they may start hiking. So right now, this is just normal volatility. All of this is normal volatility. We do expect this will eventually come into line with this, and so does the Fed, or they would not have cut last week. Okay? The Fed sees this spike. They see it. They know. They know about it, trust me. It's just not enough for them to be concerned yet. That's why they haven't said, we're aware of the 30-year-old spike. It's well within normal volatility. Or they'll say something more, I don't know, press related. Like he'll say, yes, the 30-year is spiking a little bit, but we expect it'll come in line, blah, blah, blah. You know, they're not going to change policy just because this is happening. They can't come right out and just tell everybody, no, you should short the yields right now. That would be, yeah, that would be market manipulation. But by them just telling us what they're going to do, that tells us how we should be positioning. So I'm not saying that you're going to make money on TLT either by getting long, because this should be going down. Obviously, the 20-year is closer. Oh, it should be rolling over. It's not. It hasn't yet. It started to, but here we are. So I get it. I fully understand what's going on here. I just am anticipating that it will start to roll over. If it doesn't, then I'll eat a stop. I'll be okay. I'll survive. But it should not, the TLT should not be going up right or down right now just because of a dividend payment. It's going down because market participants are selling it. Literally. They're like telling the Fed, nuh-uh, you're wrong. And it's just a matter of time before it either bounces or stops out all the longs who are anticipating a TLT bounce. So, I don't know, maybe I'm confused. Maybe you're right. But long term, the TLT should go the opposite direction of Fed rate cuts or rate hikes. Like, it should do the inverse. So instead of taking this trade right here, if you want to be like, if you want to dial it in even more, you could, right? You could simply get long the 2-year bond, because the 2-year is much, or not, yeah, not this. This is the yield. The bond is this. You get long the bond. This is the 2-year bond futures. So you would be long this because the Fed is lowering interest rates. You get what I'm saying? Here's the interest rate curve here for the US. So their front month policy will ultimately affect the long end of the curve. It just takes time to get out there. That's all. But yeah, this is going in the right direction. So instead of me telling people I'm long TLT, I should have told them to buy this down here a few days ago. But this has a lot more margin associated with it. You need like 20 grand in the account just to trade this thing. But it's doing somewhat what it should be. Yeah, I'm not really a huge bond trader anyway. I like scalping crypto volatility better. Me, myself. But mainly when I'm looking at that macro, it's just to kind of give me a, like, what's going on longer term, like how are people positioning and whatnot. So the simple reason that the 30-year yields are and 20-year, 10 years are even going up is putting risk into Bitcoin, right? People are afraid. They're nervous because this is happening. So I just like to keep a small eye on it. The same way I look at other things. I mean, the volatility's been up pretty much all year. So it makes sense that this isn't doing exactly what they do. But it's close. We'll see. If we make a fresh daily low today, I'll be out. I'll get out. I'm not going to eat a lot of loss. I'll eat a small loss. Where's Ethereum here? Yeah, we do okay identifying trend over here. Whether it's on the daily chart or a monthly chart, right? On most assets. I already took a long on the more near-term trade. That trade already got stopped out. So I was a little early. I wanted to see what they would do in December because there was rumors starting to spark that they wouldn't cut because of that 30-year. They did. So now you got people bitching about inflation. And they're right. They are potentially right. Them cutting interest rates right now and printing a buttload of money is going to cause inflation to go up. You've been chipping away at it yourself, but appears the market is pricing in a risk blowout on the long bond. I don't know if it's pricing that in. It's within normal volatility. Like, if it gets way above 5, then maybe you could say that, right? But it's still well within normal volatility. The Fed hasn't even brought it up in a meeting yet, so they are not concerned about it yet. When they get concerned about it, then I'll be more concerned about it. But they didn't seem concerned about it when they cut this month. So we'll see. I mean, it just makes sense that it should. It doesn't mean it will ever. Yeah, if we're on the wrong side of the big money, we're gonna find out. We're gonna what is it? FAFO. I mean, that's all we're doing, really, every day. We're FAFOing as we go. We're trying to see. See, like, Farcoin is moving up here still. Ethereum ain't. That's that FAFO stuff. And nothing works all the time. That's why you gotta, nothing works all the time, guys. No matter how much you think you're in tune with the market will reach around and smack you in the head real quick. Not referring to the VWAP, but the anchored volume profile. So, yeah, that is this. It's just a session volume profile. SVP. That's going. It's prefabbed. It's their settings. Like, you just. I'm not sure what you're asking. Let me go back up. No. Okay. So you're asking me if it's the same. It isn't. No. So what I'm looking at is go into technicals right here. Technicals. Then pull up profiles. All right. You want session volume profile, not this one. This one right here. So basically, it's going to give you the volume profile on every day session. If you use visible range like this one, it's going to give you a volume profile on every candle that is on your chart. And so that's going to be a lot more subjective. Session volume is only going to give you volume from the open to the close of the day. Right there, session volume profile. And then I just use random their settings. Whatever their settings are, that's what I use. And that's this indicator right here, SVP, session volume profile. Right? That's it. I just want to see where the point of control has been trading. So you can see that earlier it was down here. It migrated up. And now that price is starting to fail here, it's looking like those sellers did show up. Right? So it's going to be one of those days. A lot of data came out today, so this market could be very two-sided all day long. Be careful today. We'll have more data tomorrow, and then we'll know a little bit more, obviously, and then we'll make, we'll have that data to make more decisions. But it would be nice to see some volume starting to come in here, since it doesn't have to go very much further up, and I'm going to eat a stop. And then I'll be very mad. Because I could have just left it how it was. My stop was way up there. But by getting in as it traded up, like, it did the complete wrong thing. This is not what I wanted to see right here. This is an expansion up. I want to see that when I'm short. I want to see that go the other way. This way. Yeah, session volume profile. That's these boxes right here. Each one. That's your daily ranges. I know it makes the chart look ugly, but if you have problem identifying day high, open, low, close, this box shows you. It shows you each and every day. Open, close, high, low. So you can just look back and see here that so far Fartcoin had been trending lower. It doesn't mean it will today, but it has been. So tomorrow, if you get an up day, then you've got a potential reversal starting. But Fartcoin looks like it looked for a long time like it was trying to break out. It could not spend much time trading under that monthly, but it got really going yesterday. So I'm still okay with holding the short. It's starting to look worse. Worse and worse. Session volume profile. It's not anchored. It just shows you the daily range. Hopefully. See, like the other one, the visible range one, a lot of people use that. I'll show you. This visible range, it's not going to matter what time frame you're on up here. It's going to give you the volume profile for however many candles is on the chart. So if you scroll your mouse wheel in, this is going to change. See that? So it's very subjective unless you know exactly how many candles are on the chart. If you know exactly how many, like if you're only looking at the monthly range right here, and then you're looking at this, that's okay. I don't have a problem with that. But if you're analyzing just a random number of candles on the chart, you're going to be this is all going to be very subjective. This point of control won't be the same point of control depending on how many candles is on the chart. It'll change. Well, it barely changed, but it probably won't change if I go in because most of that volume is right here. That's why I said this thing looks like it wants to break out. I don't need this indicator to show me that. I can see all of these freaking day highs through here. I mean, how many are there? 1, 2, 3, 4, 5, 6, 7, 8 day highs up into this. Lots of volume right here. This little move lower was very small in comparison to this range, this monthly range. If this thing gets going and then breaks out of this stuff, you could see a gigantic move higher because of how much volume is built up in here. Yeah, don't use this one unless you're looking at long-term charts, and then you just got to know exactly. You might want to use this down here, like pull up the 3-month or the 5-day or the 1 month, right? And then it'll give you just that data. But pretty much no matter how you look at it, your point of control is going to be up here. Lots of volume up here. Very thin volume down in here. So, I mean, you can see why it literally reversed right there. There's not much liquidity down there. So now it's heading back up into here probably to get that stuff. You're probably going to see that happen on a lot. Now, if it reverses here and then starts to make fresh lows, then it doesn't matter, right? They're just selling it. Session volume profile. It's only really useful for day trades. It's not really useful for like analyzing monthly charts or weekly charts or yearly charts. Okay, I read that. Heath, you are like Bob Ross with the Bart Simpson drawing, right? That was a sick Bart Simpson. You saw that? I could probably do it better if I use my pen. I got a pen that I don't ever use. Ever. I went out and bought this stupid drawing pad / pen thing. Yeah, screw it. I do better with the mouse. I don't ever even use it. It just sits on my desk. Sometimes I accidentally leave it stuck on the board, and then it does this crazy stuff right here. And I'm like, oh, my computer broke. Crazy. Technology. I suck at it. Thoughts on OKLO? Oklahoma. Let's go look at it. No, OKLO is an energy play. I didn't know what this was, but I listened to a YouTuber the other day explain it to me. This is a play on energy. Clean energy or a new kind of technology, something, right? It's got something to do with energy. Yeah, it just liquidated, it looks like. Multi-week low, 79.01. Oh, it did. 78.67 is lower than 79.01, so you did liquidate. Yeah, it's just too much momentum coming into the level. If it reverses, then you do not want to see it closing daily under there, right? But that bounce was significant, and then 5 days later, excuse me, they dumped it. Whoever they are, they sold it. Usually when you see this kind of action, it's insiders bailing. Huge sell side pressure real quick. So someone decided they've had enough. Yeah, if it can build in a range here, I would continue to watch it. But it definitely needs to build in support here. The problem is you might run into the same scenario we did with the trade desk. Right? We wanted to see it build in support here, and it did, and it did, and it did, and then it lost it. That's what you don't want to happen with OKLO. So I want to see it build in support similarly to the way this was, but then I want to see price. If I'm long from here, I want to see price leaving this area. The same way that UPS did when we took that trade earlier in the year, right? The same way the other one did. Wrong screen. Nope. Thank you. Definitely on the wrong screen. OKLO. It's doing what right here. It's a multi-week low. So you just smoked it today. I think jumping in along today could be a little early. I want to see it build support here. And then if you get long, like say it trades here all week, just puts in like 3 more days sideways right here, then you can buy it with a stop under, right? Very close. But eventually, if you're long, you want to see it hold here and then start to trade away from this level. You want to see that. If you don't, if it just posts up here, then it could be looking to do something similar as what happened to the trade desk. See, we got the support hold So we we took the trade. Multiple days grinding, and it liquidated. It liquidated the level. Then it liquidated again and bounced. We wanted to see this continue, but it didn't. It rolled over, gave us another couple days test, and then boom, puked, broke, close under. There's not a lot of momentum breaking down here, so it's probably a matter of time before it gets back above 39 bucks. If it does, I'll buy it again. But I did get out. I can't set in a long if the price is going down. It's got to hold. Has to. So that's the problem with buying these things like this that are just going down because the trend continued, right? So that's what you could run into with OKLO. I get why people are buying it. The guy made a really good case about it. I didn't even know this had anything to do with energy. So yeah, I mean, a new energy technology could be fantastic. It's what the world needs. Whether or not they can provide it here, that's totally different, right? Order flow will dictate what price does. But let me pull up FedEx. Not FedEx. It wasn't FedEx. First one was Pepsi, right? First one was Pepsi. We had this long-term consolidation down here, right? If I ain't mistaken, yeah, there it is. There was a level down here, a long-term level to liquidate. So once Pepsi liquidated it, it spent a lot of time grinding that price out, right? Lots of time. So what we wanted to see, because we were in this for a long time. No, it wasn't this one. We were in either this one or UPS for a long time. We might have, I think it was this one. Because I remember seeing it break down and I was like, I'll give it 1 or 2 more days. And it only spent 1 day under, which is no time at all. I can set in it for 1 more day. And then it finally broke out. But this is what we wanted to see. And then it came up here, broke out above this range, and then ended up holding that as support. Boom. Then we got our move. Boom. That's what we want to see when we're holding longs on those types of trades. But we still understand that because of this trend, it could still break down. But just keep that in mind. OKLO could obviously still break down. And then it was ups, UPS. So looked real bad, right? Terrible, terrible. We bought this one. Same thing. We wanted to be long from 82 bucks. It spent a lot of time grinding it out support, and then it started to leave the area. So once it started to leave the area, we felt a lot better. We were much more confident our profit target would get hit. And it did. It got hit this day on earnings. Boom. So we closed it. The trade desk didn't work out. We thought it would, and we were more than okay with setting in that risk as it built in that support. So this is what OKL has to do. Today's day 1. So I wouldn't get in it now, especially with options, because it could grind this level out for 6 months. And your options are going to expire worthless. Give it some time. See if it can even grind this level. It might not. Tomorrow it could be gapping down. You don't want to buy that. There's too much downside momentum right here, right now. Like, look at this daily. Ugh. It's looking nasty. Big selling. Today's just like a a sympathy bounce. Yeah, it's got to grind this level out before I would even be interested in buying it. Now, with that being said, this one, we're waiting to see what it does around the 50, right? Because we've already lost the 21. So 50's last. It's it. It's the last one. After it loses the 50, it's no longer bullish on the weekly chart. If you lose the 50, unless you reclaim it back in the next few weeks, like it did here, right? So when this candle closed, I would have literally been like, okay, OKLO, probably not a buy anymore. And then we got this week. Boom. Then I would have been like, okay, maybe you can watch weekly support and buy weekly support if it holds. That's what I would have said. And that would have been the trade to take. So you got to wait for that to happen first. If it refuses to trade under $79, then it probably is going to bounce. At a very minimum, you could target like $102, right? You could buy 79.34, you could target 102. Set a take profit there. You're going to have to contend with that. So that would be a secondary take profit target. Primary take profit target would be the 21 week. You lost it last week and you're getting downside continuation this week. So far. That just means you're trading under last week's low. So you're continuing down. It could have been just to come stop run these people out, but more than likely you're going to see a day or two bounce and then bleh, you'll come down and test this 50. I think this would be the better place to wait and give it let it test it and then give it until Friday. Is it closing under? Is it closing above? How deep was the wick? Under. Like there's a lot of reasons, a lot of circumstances that could say, yeah, this is a buy or no, it ain't. But so far, since it started getting bullish back in September of 2024, they defended the 50, right? So if these same buyers have anticipation of more upside, they should defend that 50. You might have to wait 2 or 3 weeks before you get the trade off, but there's still time on this. You don't have to rush on it. But it looks okay. It's definitely an uptrending asset. We just need to see if they keep that bullish momentum or not. If they lose the 50, they lose the momentum. Like that, 50's on a weekly, a real good identifier of how strong a trend is. Paging heat. Yeah, I was on the wrong screen for sure. Thanks. I do that a lot. I am not good at this. Trading is what I like to do. This YouTube stuff, it's for the birds. A general question for the weekly 50. Do you use the weekly 50 WSM EMA? I like the EMA because the EMA, so the simple moving average is calculated on all data, right? The EMA puts more weight on near-term data. So I myself like the EMA, but other like older technical analysts, people that have been around since the 70s, they may look at like the weekly simple because they want a more refined average, where the simple will give you just a long-term average. The EMA puts more weight on the near term. So you'll get like quicker moves on an EMA than you will on the simple. So you can put them both on your chart. This EMA MA combo that I use has all of them. I just deleted it. Control Z, bring it back. So I got 4 EMAs and 3 simples. And it's just counted as one indicator. I can throw 4 EMAs out here and then 3 simples if I want, which I never do, obviously. I like this indicator because sometimes I only want to look at, say, the 50 EMA and the 200 EMA, and then I want to look at the 50 simple and the 200 simple. So there's the 50 simple. But you can see how, like, right in here, they start to get kind of away from each other because this puts more weight on what's happening here, and this does not. This ignores that move. All you can do is just look at a back test, or just look back on the chart and just decide for yourself. I mean, maybe look at both of them and just be like, hey, as long as we're in that range, I can be a buyer. If you break down and start putting in a trending move under, then you don't want to be. It's a very good indicator to look for trend identification. A very good indicator. Like, you can put it on pretty much any chart. See, through here, very difficult trading, and it lost it back. Once it reclaimed it through here, you never retested either one of them. But back over in here, the 50 would have been better to watch. The simple. It would have had you buying quicker, right? And if you were waiting on to buy the 50 EMA, you would have been buying higher. But yeah, you get what I'm saying. I usually don't want to see a 50 weekly test, but it is what it is. You don't get them very often. That's why they are effective. Other stocks they're going to give you different results, but I mean, this thing lost those years ago, right? Yeah. But it looks like through here, the EMA was a terrible thing to watch for the short. So maybe just watch them both. Very, very, very choppy. This thing is dead, almost. This also dying. Here's another one right now that is literally testing those. But it already tested it back here. Got a bounce, and now you're back. So, might not be the best buying off here. But if it takes out last week's low and bounces, I could probably buy that. Hasn't done it yet. It's trying to do it today. See how it closes. If it closes under, then leave it. That one don't even have 50 candles. Joby, same thing. UPS, right there. So if you thought UPS downtrend was going to continue, you could literally be selling UPS right now. I wouldn't want to because of that bullish momentum right there last week. So since it was so momentous, maybe see what it does here. To be honest with you, the daily res is there. So if it fails to close a day above that, I would be able to come down from this high horse and jump on it there, a short. But That's a lot of momentum. You've been trading sideways for the last 4 days. So the bears are barely winning. Those guys that literally sold that 50 test. But I would say this is more of a take profit move than it is a full-on get short move. The chances are you're probably going to run that high. But yeah, I mean, if that long-term trend is to continue, this might be a buy again because of that. If you can get an expansion above it, people will be waiting for the retest and they'll be looking to buy. So you could be literally changing the long-term trend on UPS right now. If it fails, we'll be looking for shorts on UPS. And it's a good thing that it's happening in between an earnings call. That's cool. Because that gives us a little bit of room to operate. Right? Every single other time it happened on earnings. On earnings. So we're gonna move UPS up here. We don't want to short it. It doesn't look like a short. The daily would keep us out of the short here. The daily would have us buying 21 tests right now. Yeah, so this doesn't look like you even had a gap to fill down here. See this gap? Massive gap. They didn't even fill it. They literally ran it down below that low and then boom, up it goes. Gaps don't have to fill. But we'll keep an eye on this for sure. If this starts to run out of steam or look like it's going to roll over, we'll take the short. I don't know how low. I could probably short it. Yeah, probably I could take the short and target like 95.55. A little bit higher than that, like 96. Yeah, I think I would. If it fails here, I would target 90, like 96 bucks. So you could literally buy the one, whatever it is, maybe the 100. You could buy the 100, sell the 96, put on a small downside put spread, but a lot of momentum to the upside here. And this is after a long-term rounding bottom. Big bullish move and a fresh higher high. So I don't love the short. I would rather it break out and then buy the 50 on a retest. We'll see what it does. Yeah, FTX just got bullish AF and it didn't look back. Baba could go back a little bit, but Baba did ultimately find support, hold it, and this could be a pullback, could be a buying up on Baba, but right now it's trending under that weekly low right there. So I couldn't be a buyer unless it started to defend that price. You're breaking it today. So, I don't know about today. A lot of gaps down there. I know. Yeah, that's that oil move right there. Ooh. See, this is why I tell people to stay away from United Gas, man. This thing only goes down. It was looking so good a couple weeks ago. I hope you guys took profits, all of you longs that were trading this. I know a lot of people asked me to look at it, and I kept saying, if you want to buy nat gas, buy something else, not UNG. UNG only goes down. They keep doing inverse splits. All the splits are inverse. That's how this product works. Yeah, you get violent spikes, but those are usually selling opportunities, not buying ops. This thing is, buy something else. Trying to hold support. This was nothing. This is Paramount. They just bought UFC. I might be interested in buying this here. If PSKY holds here, I'm gonna buy shares. I might buy shares right now. I'll give it another day. I'm not gonna buy them right this second, but you rejected above last week's low. You're doing that right this second, right now. So be, cautious about it today. It looks like OKLO, right? It did get a bounce, but then immediately come back. So right now it's got a little bit of sell side pressure to it, but if it can hold this area, then I would be okay with picking up some shares here. They bought the UFC, and that's going to happen starting 2026. So the fact that this is pulling back deeply going into the end of the year, it makes sense. Makes sense. BMNR. Yeah, BMNR is going to be okay if Ethereum is. I'm sure there isn't a new level on BMNR for us to look at. I'm almost positive. This is going to be an Ethereum. I'm on obviously the wrong chart. Yeah, it doesn't look great. Get over there for a second. All right, so yeah, it looks rough. It just lost the daily 21 again. Doesn't look good. I mean, it's trying to hold the 50, right? It's trying to hold it. If it can, maybe. This is the ugliest, disgustingest thing. I don't like charts like this. But to be fair, it did hold. The problem is it going to in the future? So this is the support zone. Technically speaking, you could be watching right here, right? If it refuses to go lower. But you're not really seeing a big bounce today there. Maybe you do. Maybe today it closes back up in here. But you can see where people are trying to buy it, at least, right? They're trying to buy that way. Simple down here. It would be easy to mitigate risk, right? You can buy it here and sell it at 21 or 22. If it doesn't work out. but you have to buy a specific amount of shares to get that stop loss to whatever your expected loss would be. I don't know that it's going to bounce from here. I don't know if you're asking me if it's going to bounce. Obviously, I don't have any clue. But I mean, it could, right? It could. They couldn't hammer it there, so that's good news. At least there's that. You got that going for you. If it can continue to do that, and what I mean is if it can continue to close weekly candles above 30.51, that's probably where I would rather buy it. At least then I can say, well, I don't want to keep in it under 24.35 if it's trending below that price. A 1, 2, 3 day bounce I can hold, but yeah, I don't like it because it's not Ethereum. If I want to be involved in Ethereum's move, then I would just buy Ethereum. That to me just makes more sense than buying this ugly chart to maybe catch an Ethereum bounce. Maybe if this chart looks good after, I don't know, say 4 years of them being an Ethereum company, then maybe I could look to buy them because it's cheaper. I get it. But yeah, if I'm looking to buy Ethereum, and we did buy Ethereum today, we got stopped out the first attempt. That trade is still open. But I mean, if it don't start doing something soon, it won't be, right? Very, very sideways day. But I would just rather buy this, because then I don't have to guess. I don't have to look at this chart and be like, why aren't you doing anything when Ethereum is up 12% today? Why are you only up 2%? You know what I mean? It takes out of it. If you want to participate in Ethereum volatility, buy Ethereum. You can buy it with $12. Did I get kicked? No, not yet. All right, we're going to have to wrap this up. For some reason, we're not putting out much. All right, let me just make sure your screen share is stuck on ETH. Well, I'm on ETH. I know my screen was on the wrong screen earlier. Similar look to OKLO, but more price history. Gotcha. General question for the weekly 50. Yeah, read that. And then, good morning, ETH. Could you take a look at Palantir and NVIDIA? Yeah, let's go look at those real quick because I do want to see them today. All right. First, we'll pull up Palantir. I'm not buying Palantir. I know Palantir is currently working on some big government contract. And they're also working with... Excuse me. They're also working in Europe. So, I mean, Palantir is trying to be big in the AI interface for government weapons, right? And obviously, I thought this thing would pull back. It hasn't. Like, it did pull back, but then it came right back, and it hasn't faltered yet. So clearly, people think Palantir still has value. Could this just be a dead cat bounce? It could be. It could be. Like, it could be a short covering rally, but I don't know. You know what I mean? So I wouldn't be looking for shorts on Palantir above 190.31 for 39, because if it's going to roll over, chances are it'll liquidate last week's high and then roll. If it isn't going to roll over, then you're going to get above that and keep pushing. Super volatile stock. The options on this are super volatile. Would I be a buyer of Palantir stock here? No, I wouldn't. I would just wait for Anduril to become public and buy Anduril. You know what I mean? Palantir went on a crazy ass short squeeze. It's just a matter of time before it gets priced to normalcy. We don't know what normalcy is. The market needs to take time. Obviously, right now, it looks okay. But I definitely do not want to buy Palantir at 186. I just don't. It is... I mean, this is super strong. This trend, it did accumulate here. I could have participated in that move, right? Because it spent multiple weeks going sideways here. So I could have put on like a day trade on Palantir where I would have been looking to buy that week low and then target a week high, right? That would have been my trade. Just boom, boom. This week. Like I would have been in here and target that week's high. Out. And that's as far as I would take Palantir. If you're scalping it for intraday or intra-week moves, that's okay. I'm okay with that. But I would not buy this to put in a long-term hold portfolio. It's so extended. I mean, not too long ago, Palantir was trading for $10. It seems like forever ago. But it wasn't that long ago. 2024 opened at $16.95. It's trading 10x above that. So it can keep going up for sure. That's the risk when looking for shorts, is upside unlimited risk. But I don't think Palantir's a good buy up here according to the PE ratio. It's overblown, overdone. That doesn't mean it can't go higher. So it could be a good intra-week scalper. If it fails at 190.39, maybe look for an intra-week scalp short lower, target 178. Or vice versa. One could potentially look for longs at 178, target 190. Right? You're just looking to scalp the range anyway. So that's the only way I'd play this. And then Nvidia, long term, it's pulling back here. It's still pulling back. It's definitely trying to hold support. So the more time it spends holding support, the more I like it for another upside rally. Now, with that being said, there's a lot of people saying that the Nvidia is not accurately priced here, but according to what they make, they are absolutely fine where they are. They're pulling back. It's just Tuesday, so that's a gap up and a retest. So maybe it's done going down. We'll see. I don't really... August's open is down here. But other than that, for me, like the daily is saying it might want to pull back a little bit deeper, but I hate shorting Nvidia. I do have an Nvidia put on, but that's only... I put the same trade on Michael Berry did, just so that way we can see how it works out for him. So I wouldn't forget about it, essentially, is all. I don't anticipate that trade to make money. We are literally in the 50 strike put on this thing. It can't possibly make that much money. But if Nvidia, if he's right on his analysis, I'm not going to go over his analysis. If you want to go over his analysis, you can find it on Twitter. Right? But according to his analysis, Nvidia is highly overpriced. And he thinks it's going much lower. Only time will prove if he's right or wrong. His expiration is all the way into January 2027. So he's got 1 year. 1 year and a week and a half, right? 1 year and a week and a half to be right. It doesn't have to get down to 50 for him to be right either. If you have a massive downside move on Nvidia, he could make money on that trade. If you get a massive incline on IV, it's going to cause that put premium to jack up. If it gets jacked up, then he'll be able to make money on that trade. I put the same trade on to see if he does make money on it. That's it. If I lose, I'll lose. I'm okay with it. My risk is mitigated. I'm going to lose $60 per contract, which isn't nothing. It's a very simple, easy way to mitigate risk. And if it does dump hard, if he is right, then that trade could end up being a really good trade. But I put it on. I wouldn't have put it on for myself, but we'll see how it works. But yeah, you could still put it on. There's still plenty of time on it. The trade itself is the Jan 15's expiration, Jan 15, 2027. You can actually put it on 10 cents cheaper than what I put it on for last week. I put it on for 62 cents. You can put that trade on today for 52 cents. It is way, way, way outside of the money and way, way outside of what the option market is pricing possible. So you would need a significant drop in a short amount of time to make money on that. With that being said, it looks like it has topped out here on the near term. So maybe people are going to back off of it for a little while. But the August open is down here. And I mean, I would just use December's. I wouldn't even use August. I would just use December's. And if it fails there, then the next place to look would be November's low. That's the only thing you can do on NVIDIA. But yeah, that $50 strike put, just to give you an idea of how far away it is, NVIDIA would have to lose close to 75% of its value. Now, like I said, he won't need that to happen. If it just dumps like 3 months in a row and it's a significant dump, the premium will get jacked up because the IV will go up. When the IV goes up, the put premium swells, and then he could, in theory, make money. All he's got to do is sell it for more than he bought it for, and he'll make money. But when we put that trade on, there was only 8,000 contracts in open interest. And we put it on after he put it on. So 2,000 more people have come along and put this trade on. Now, I don't know if 1,000 bought it and 1,000 sold it, but I'm just saying it was like 8.2K when we got involved with it. So it swelled up another 2,000 contracts. So more people have come out here and put it on. But we'll see what happens with it. I don't expect anything, but we'll see. All right, we're going to wrap it up. I got to get something to eat. You guys have a fantastic rest of your day. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.